But certainly there's a tendency to lift here this morning. A firm 97.24 down at the bottom. It'd be interesting to see where that opens up and paces through. Francine, I note sterling with a bid.
Yeah, sterling is interesting because of what we're seeing, in terms of all the chatter about equivalency, which seems unlikely in the financial service sector, but also the way that the Prime Minister is dealing with the pandemic. I'm looking at Treasury yields, Tom. I know you spend a bit of time talking about it. I think it's probably the biggest story of the week in the markets. We'll see whether we have more news about that possible $2 trillion relief plan. And then I also wanted to show you two things. Italy, that 10-year Italian yield, 0.489. Unclear where this constitutional crisis, this government crisis brings us, whether we have a new prime minister or not, or we just have a new coalition. And then Carrefour, a lot of market participants were surprised that once again France wants to get involved in market stories.
What is that about?
With the finance minister saying, no, we're not for Canada's Couche-Tard coming in with a bid for Carrefour. They want to protect it, and so this, legally, I'm not sure how they'll do it, but they've done it in the past. They want to protect their jewels, but I think it has huge market implications and maybe also investment implications for France as a whole.
We will see. Team surveillance is global, and the people that compress all this news flow for you into the emotion of what is wrought can be out of, say, Hong Kong, where Rika Yoshida holds court. She listened carefully and pieced together the debate on the House floor.
We know that the President of the United States incited this insurrection, this armed rebellion, against our common country.
There's no way this helps the nation deal with the tragic and terrible events of last week that we all condemn.
If we impeached every politician who gave a fiery speech to a crowd of partisans, this Capitol would be deserted.
He must not remain in power one moment longer.
We must impeach and remove this president.
If inciting a deadly insurrection is not enough to get a president impeached, then what is?
Nearly half the country supports our current president. This takes their voice away.
A vote to impeach will further fan the flames of partisan division. That doesn't mean the president is free from fault.
And he is capable of starting a civil war. He must be impeached.
This threat must be extinguished immediately.
Last week there was a domestic threat at the door of the Capitol, and he did nothing to stop it. I will vote yes on these articles of impeachment.
Interesting. Dan Newhouse there, a Republican, voting with another gentle lady from Washington State here, 10 Republicans voting. Picking up the pieces in Washington, Jack Fitzpatrick. Jack, a dumb question. What happens today?
Today, it looks like not very much, and probably for the next week, not very much happens on the impeachment front. We're still trying to find out if the House is going to send the articles immediately to the Senate, but even if they do, the Senate is not set to come back until January 19th. It can't start the trial until January 20th. That's because they'd need bipartisan support to come back, since they had already adjourned until January 19th. So as far as we can tell, we've just got a quiet period, and senators can think about what happens in a week.
Jack, maybe an unfair question, but I'm going to go with it. Not beneath the fold on digital newspapers, but somewhere beneath the major headlines is the continuing count of people arrested. Provide us insight of what's going to happen to the people. I see a number like 170, 180 continues to grow. Folks, do they get shipped back to Washington? Or is the legal process from coast to coast?
I'm a little more on top of the front end than the back end of what happens after they get arrested. The lawmakers I've talked to have talked about expecting federal charges to be filed against these people, and emphasizing that it's not exactly just destruction of property when you storm the Capitol. And I know that they are soliciting, the FBI is soliciting as much information as possible to continue to ramp that number up. And this is they got off to a slow start in arresting people, but they say they've gotten thousands and thousands of tips digitally. So I can tell you there is a major focus on arresting people still and getting information on the people who are there. And I know there's talk of federal charges, but I couldn't really speak to the people who have already been arrested because there is sort of a variety of charges that they're already facing at this point.
Jack, what are you expecting the president to do, or in terms of tone? How will his tone change, if it changes, over the next 7 days?
There's been a lot of back and forth on his tone because he initially spoke in person in the tone that you heard in his speech, which is in question now, then put out a video that was edited to be a much softer tone. We've seen written statements that are a softer tone, and then he seems to go back on that. I think it's safe to expect there'll still be some back and forth and a major focus from the White House on putting out written statements and maybe some pre-recorded videos that don't let anything go off the rails. The threat of some legal action against him after his own presidency encourages him to emphasize that he didn't want to specifically call for violence. And so that's been a focus lately, but that's largely been through written statements or pre-recorded statements rather than speeches.
Jack, how does the Biden administration get back to talking what they want to talk about, which is, you know, the next 4 years and policy?
It's going to probably take a little bit to really get action with their legislative agenda. The impeachment makes things difficult for the Senate to get going on cabinet nominations and confirmations, let alone moving to legislation, although we could see the Biden stimulus proposal as soon as today, or at least in the near future. So they'll be doing early work on the legislative agenda. The Senate schedule makes it difficult for them to really get a lot of action on a lot of their priorities very quickly. I think they're probably due for a slow start in that regard because of impeachment and the delay in their confirmations. But they can at least start the talks, start the negotiations, and get announcements going on the earliest priority, which is more coronavirus and stimulus measures.
Very good. Jack Fitzpatrick, thank you so much. An interesting day in Washington. Futures up 4, Dow futures up 82. Coming up on Balance of Power, Kay Hutchinson of Texas, and of course our U.S. ambassador to NATO in the 12 o'clock hour with Mr. Weston. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
we explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Bloomberg Surveillance. Good morning, everyone. Tom Keene in New York, Francine Lacroix in London. We're looking at all sorts of stuff in Europe, some real turmoil in Italy, although I haven't seen yields move there too much, and also the continued pandemic. We come over here to all going on in Washington, and of course, moving forward with the markets. Business still getting done. January 4th, Francine, feels like it was like a month ago?
10 months ago.
10 months ago, something like that. Just amazing, the news flow. On the markets, on the dynamics of what we see and not see, Greg Bowdle joins us, BNP Paribas, head of equity and derivative strategies. Greg, what do the derivatives signal right now about expectation?
Good morning. I think in terms of the derivatives market, the interesting thing is it doesn't seem to be quite as euphoric as the broader equity market. You know, equity markets made new all-time highs a while ago. We've seen a lot of money being put to work in equities in Q4, but the volatility premium is still very high. The VIX is still in the mid-20s, which seems to be signaling a little bit of a disconnect versus the much more risk-on feel in the market.
Can you bet of a VIX moving from a 22 to a more peaceful, complacent bull market, say 18 or 19, or is that just a bet misspent?
I think in our view, that is what we see as most likely to play out in Q1 this year. We had a huge amount of volatility in 2020, not only from the vaccine, but there were a lot of calendar events, US election politics. We look to 2021 and we see far less known unknowns or calendar events, and we see a cyclical environment that we think is far more consistent with lower volatility. 20 has been the level to watch on the VIX. The VIX has bottomed there several times in the second half of last year. We think that's a level that can be breached on the downside in Q1 this year.
Greg, how much do you actually worry about liquidity in the markets in 2021?
Well, we started off with a very busy year. There's been an awful lot of trading activity, good volumes in the market. I think the fact that we've had such easy monetary policy means that liquidity still remains abundant. So liquidity at the moment, certainly for equity markets, is not really an issue.
When you look at some of the market plays and the reflation trade and things like that, what do you need to hear from the Biden administration for inflation prospects to really take hold?
Yeah, I think it's inflation really is a key for the rotation that we're seeing in equity markets. Expectations are obviously growing by the day for what type of stimulus we think we will see in 2021. So clearly we have to have something delivered by the incoming administration. We think that if we get something over and above COVID relief at some point in 2021, such as an infrastructure package, that's the type of thing that we think could spur kind of an extra leg higher from the value-orientated names.
Greg, it's maybe off your remit a little, but I'm going to go with it. I've got curve steepening, I've got some form of moving yield, and I've got the certitude and belief it will benefit the American big banks. Is that linkage correct?
I think the linkage is correct, but we have to think a little bit about the magnitude of the moves. So at this stage of the cycle, if we do get a significant steepening in yield curves and we see rates picking up materially, then that should be good for the US banks. Now, the issue is the magnitude of those moves. Yes, rates have picked up, but rates are still at an incredibly low level. We think we could get more yield curve steepening and we could get rates picking up further. But if we have the 10-year yield pick up to 130, 140 by the end of the year, that still leaves rates, in a historic context, incredibly low. And we've seen the playbook of what low rates mean for banks in Europe, and it's a difficult environment.
Yeah, I look, Greg, very quickly here at reframing what was the 2021 view. With all that's going on, and what is it, 14 days of January? Have you already reframed the view for this year?
So we have a little bit. We've increased our price target for the S&P up to 4,100 from 3,900. The driver for that really was the dissipation of some of the political risk and the fact that we do now have a unified government on the cards for 2021. So that increases the probability of that fiscal stimulus that we spoke about, and we think that could be an additional driver for equities.
Greg Bottle, thank you so much. With BNP Paribas, U.S. Head of Equity and Derivative Strategies. It was long ago and far away where BlackRock came out with earnings. And Francine, I'd sort of say, yeah, you know, great, BlackRock, so what? But boy, have they grown, and boy, has Mr. Fink's shop become dominant. Francine, they come out here talking of a dividend lift. They've got some pretty good numbers. I find it amazing, the ETF flows versus institutional flows. It's just, it's really something what they've wrought in 10 years.
Yeah, they have, Tom. I think a lot of the focus, though, will be on, you know, after Larry Fink's pledge to do more on ESG is the way that some of these giants vote. So I know the focus is, of course, on AUM, and they seem to be beating estimates, is also how seriously they actually take their pledge for more sustainability. But for the moment, you know, those assets really rising at a record of 8.7 trillion in the fourth quarter.
Doing the math here, 10-year return, 14.8%. Let me compare that to Mr. Mr. Solomon's shop, 7%. So Fink has basically doubled what we've seen at Goldman Sachs, Francine.
Yeah, there's something to think about. And of course, we'll look at exactly what comes next and who they're taking, you know, some of these assets away from. Coming up on Bloomberg Markets, European Close, Mary Daly, San Francisco Fed President. That's coming up 11:30 a.m. in New York. That's 4:30 p.m. in London. What a day to speak to Mary Daly about treasuries. This is Bloomberg.
For a typical clothes wash, up to 700,000 fibers can come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles et d'autres parties, bouteilles, sont plutôt stockées que nous fournissons à certains partenaires.
How different will the beauty market be in 2-3 years?
We'll see. You know, it's too early to tell. But I would bet that they won't change fundamentally. You know, I have been through many crises, and it won't be very different.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. That potential $20 billion takeover of French grocery chain Carrefour by Canada's Couche-Tard is running into opposition. The French government says the coronavirus outbreak has demonstrated the importance of domestic control over food supply. There's also skepticism from investors. Bloomberg has learned that the US has decided not to ban investment in China's Alibaba and Tencent. That removes a cloud of uncertainty over two of Asia's biggest corporations. The Pentagon wanted Alibaba and Tencent blacklisted on the grounds they aid the Chinese military, but the Treasury Department decided against it. And the number of apartment leases signed in Manhattan almost doubled last month from a year ago. That's a sign that falling rents and landlord incentives are attracting tenants. According to appraiser Miller Samuel and brokerage Douglas Elliman, the value of those perks led the median rent to fall 17% to $2,800 a month. And that is your Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, the focus firmly on treasuries, a lot going on with, reports and speculation of what Joe Biden will say in terms of that COVID relief fund and how big it could be. So I'm looking at treasuries. I know Tom is firmly focused on treasuries. I'm also looking at the Italian 10-year yield, 0.489. Now, of course, all of the moves are limited because of ECB action, but we could be on the brink of a government collapse. We could see a new prime minister. There are various ways to go about it. And finally, Tom, Carrefour. I thought this M&A story was extremely interesting because we found out yesterday that a big Canadian company Couche-Tard was making a bid, $20 billion bid for Carrefour, but now there's opposition from the French government casting doubt on prospects for this transatlantic retail deal.
In America, in the data check, there's only one data point that matters, and I say this with great respect for John Farrell, who got his usual 8,000 shares of a firm, which is where does a firm open and what is the trajectory of this huge IPO success? 31 to 41 and then ballooning out to 97 on the close. This is financial services competing in the credit card and the debt and I need to buy a new washing machine business. But that's really not transfixed, but caught the imagination, I should say, of global Wall Street. NASDAQ with a little bit of red on the screen, green on the screen going the other way. Futures up fractionally too. Coming up, my interview of the day, not on this Washington, but the Washington and the New York and the Mar-a-Lago forward. Tim O'Brien knows more about the president's finances than anyone. Tim O'Brien, coming up.
Компьютер открывает новые возможности детям с двигательными ограничениями, которые закованы в своем теле, еще и не могут разговаривать, да? Они не могут никому объяснить, что они хотят, да? А тут получается, что компьютер дает им эти возможности, а компьютер озвучивает то, что хочет ребенок.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
He must go. He is a clear and present danger to the nation that we all love.
Violence and vandalism have absolutely no place in our country and no place in our movement. Mob violence goes against everything I believe in and everything our movement stands for. No true supporter of mine could ever endorse political violence.
We welcome all of you to Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Keene in New York. This conversation has been widely anticipated, not so much on the path to January 20th, but the path of the President of the United States after January 20th. It can be a 2-hour conversation. We don't have that luxury. With Timothy O'Brien, Bloomberg Opinion, Trump Nation, of course, definitive, and he knows the finances of this president better than anyone. Tim, I find an absolute fiction the idea that the president owes $300 million to Deutsche Bank. What does his January 21st or his February 21st look like financially?
Well, he does have a lot of short-term debt coming due, Tom. He's got over $1 billion of debt on assets that are worth between, well, at least pre-pandemic, they were worth between $2.7 billion and $3 billion. And about a little bit north of 400 million of that is short-term stuff that he's going to have to pay down. I think, there's been a lot of, is Donald Trump going broke? No, he's not going broke. Is Donald Trump going to lose everything he has? No. Does Donald Trump face a potential cash squeeze that's going to force a fire sale and that's going to have to force him to peel off some of the things he values the most? Absolutely, that could happen. And I think he's going to find himself now out of the White House at the mercy of financiers and other business partners who no longer have to play patty cake with him because he's no longer president.
Tim, I've been hit over the head with Tim O'Brien questions, and I don't know how to answer them, so you're going to answer it right now. Can he funnel the fundraising he's done in the last number of weeks, tens and even hundreds of millions of dollars, into his private use after he leaves office?
Absolutely not. It would be illegal, and there would be a crackdown immediately. He raised about more than $200 million between Election Day and the present, perpetuating this farce that there was an election fraud, and he sent emails to his supporters for small donations that turned into a cash cow. All of that money has to be used in some way for political purposes. He can use it to do rallies around the country and pay for his travel fees and associated costs, and those will actually be moneymakers for him as well. But he can't use it expressly to pay down debt or to deal with parts of his real estate and travel and leisure holdings.
Tim, how many people believe the election was rigged? And actually, how do you mend that divide?
Well, I think clearly tens of millions of Republican voters believe it was rigged. Francina, 74 million people voted for Donald Trump. That number is thrown around a lot. You have to remember in U.S. elections, in every election going back to about 1920, except for 2 elections involving Franklin Roosevelt and 1 involving Ronald Reagan, the Republican-Democratic divide was firm with a narrow middle. This has never been a country where the votes have swung one way or the other very strongly. People identify with their party, they vote accordingly, and they're willing to forgive a lot of stuff. The issue is what happens in the middle here going forward. And that's going to be the battle, I think, for the Republican Party. That's why you see institutionalists like Mitch McConnell at war essentially with flamethrowers like Jim Jordan and Matt Gaetz.
Tim, I'm not sure this is, a simplistic question, but actually, when you look at the images, and they're forever in our minds, of January 6th, with the riots of yesterday, a lot of the National Guard sleeping on the floors, acting overnight to try and protect the Capitol. What were we watching? What does it mean for American democracy going forward?
Well, let's put this in historical context. The Capitol building had a significant breach for the first time since the War of 1812. You had military and National Guard in the Capitol for the first time since the Civil War. You had a Confederate flag in the Capitol for the first time since the Civil War. And the violence that we saw, I don't think, is a one-off. The notion that Donald Trump has been perpetuating that he's against violence, he's surprised this happened. Violent rhetoric and violent actions have been part of his presidency since he came down the escalator at Trump Tower in 2015. He has threatened people at his rallies. He said he'd like to kill people at his rallies. Pipe bombs, you may recall, were sent to the media and to prominent Democrats a couple of years ago. His advisors engage in violent rhetoric. And there's a very violent undertone to part of American society that's been with us since before Donald Trump. And it's a deep scar that the United States has to address.
Tim O'Brien, overnight, Speaker Pelosi put out a blistering note speaking to select Republicans who are aggressively breaching security protocols at the Capitol and also providing abuse to Capitol Hill police. The statistic, folks, is $5,000 and $10,000 fines. Do you have an optimism that the moderates of both parties can rein in the excesses of Trump overt verbal and physical outrage?
Well, I don't know, Tom. It's certainly emblematic. The issue of whether or not people want to go through a magnetometer in Congress is, to me, parallel to whether or not average folks will wear masks to fend off the coronavirus. This part of the American psyche and character of "don't tread on me." Anything the government does.
Well,
let's
go there. Wait, stop, Tim. You nailed it. You absolutely nailed it. What is the symbolism and shelf life of "don't tread on me"?
It is historic and long. Our history, this idea of manifest destiny. The American settlers settled the West. Individualism won out. It's this myth Americans tell themselves about their character, when in fact the American economy, American government, and American communities have always been about robust public-private partnerships in which the government plays a constructive role. We rely on the government to build roads and defend the country and build schools and fire departments and police stations. It's bizarre and actually harmful when people won't do the small things like wear masks or go through a gun screen for the safety of the community around them. And it's petty and small and damaging.
Maybe we'll have Speaker Pelosi get a rattlesnake, like the timber rattlesnake, on that flag back to the Revolutionary War, and we'll see about security. Something to follow through the day. I know David Weston will have coverage on that with Kevin Cirilli as well. Timothy O'Brien, thank you so much for joining us with Bloomberg Opinion, definitive on the president's finances. With our first word news in New York City is Ritika Gupta.
Thanks, Tom. President Trump has become the first president ever to be impeached twice. The resolution was approved by all Democrats in the House and 10 Republicans. The president was accused of one count of incitement of insurrection for last week's riot at the Capitol. The next move is up to the Republican-controlled Senate. It's already rejected requests to bring senators back early. Meanwhile, President Trump called on Americans to unite and avoid further violence. He spoke on a video released 1 week after his supporters stormed the Capitol.
Violence and vandalism have absolutely no place in our country and no place in our movement. Mob violence goes against everything I believe in and everything our movement stands for. No true supporter of mine could ever endorse political violence.
The president didn't mention the impeachment vote. National Guard troops have taken up positions in the U.S. Capitol. More than 20,000 Guard personnel have been summoned. That's turned the Capitol into its park-like campus into an armed camp. Authorities say there's a major security threat around next week's inauguration, and they're trying to prevent a repeat of the riots at the Capitol. And in the UK, Prime Minister Boris Johnson warns that hospital intensive care units could be overwhelmed. That's after the country hit its highest daily coronavirus death toll since the pandemic began. Johnson said there is a very substantial risk of intensive care capacity being exceeded. He urged Britons to follow lockdown rules to curb the spread of the disease. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom Francine.
Ritika, thank you so much. Now, coming up, we continue tracking COVID-19. We speak with Jason Farley, Johns Hopkins University nursing professor. We talk about this one-shot J&J vaccine. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we continue to track the virus, of course, as every day. Bloomberg has developed this unique partnership with the leading authority on COVID-19, and Johns Hopkins has been at the forefront of the international response. Every day, we bring you insights from experts in public health, infectious disease, and emergency preparedness. And we're delighted today to be joined by Jason Farley. He's Johns Hopkins nursing professor. Jason, thank you for joining us. There's a bit of a buzz because very initial early trials of this J&J one-shot vaccine are looking okay. How far away are we from this actually passing all the tests needed to be able to be administered?
Yes, good morning. Well, the J&J data that was just released in the New England Journal of Medicine was basically demonstrating its early safety and preliminary efficacy data. It's called a phase 1A or 2 trial. And in this study, they basically found that a single dose of an adenovirus vector vaccine, it cannot replicate inside your body, but using that as the vector to get the antibody into the body, produced after about 57 days immunity or enough neutralizing antibody in about 100% of participants. Again, that's one dose after about 57 days. So that's good news.
Jason, I want to talk about vaccination in the real world of nursing. Do we have the nurses to do vaccines, or are they so exhausted they can't be part of that process? Is our nationwide and indeed our global nursing ability fractured?
Well, I think it's an all hands on deck approach right now. And so because of our inpatient capacity, the number of hospital beds taken from COVID, we're not looking at our inpatient nurses or other healthcare providers to really provide that vaccine surge. So we're looking at outpatient providers, retired nurses, pharmacists, EMTs, anyone basically who has the skill set to administer a vaccine and give an injection. So what we're doing is many states across the country are preparing through their medical response corps. I know I just signed up as an added volunteer in my own medical response corps here in Maryland. So I would encourage any healthcare worker out there listening right now to go to their state site and sign up.
Can I ask a dumb question? Is it hard to give a shot? Like when you learn to do a shot, is it like a real skill?
Certainly. When we're looking into assessing the site, obviously people know that we give shots sometimes in the arm, sometimes in the buttocks. It's all about the volume given in the injection. So you'll see these shots being given in the arm because they're a smaller volume. You want to make sure you're not hitting blood vessels. You want to make sure you're not hitting a nerve. So placement of the injection in the muscle is key. Also, depending on the length of the needle, you definitely do not want to hit the person's bone. That will cause pain. So there's several things you're thinking from a technique perspective that have to be part of your training.
Jason, what's the hardest thing right now to administer the vaccine?
Right now, it's the supply. There are many people who want vaccine but do not yet qualify in many states for accessing the vaccine. For example, I have been getting emails from an 88-year-old retired nurse who is desperate to find her access to the vaccine, but based on our local policies and procedures, she's not yet in that top tier of individuals because of her overall healthy status, as well as not living in a long-term care facility. Many, many people want the vaccine, but they just don't have access to it yet. So that's first. Second, we're hearing reports of vaccine distribution slow, plus not only the distribution, but the setup of large-scale distribution points has been slow to respond. So if we're thinking in the first 100 days of the Biden administration that we will get to those 100 million doses, it will be an extremely large uphill battle, given that it's been about 10 million doses over 2 months at this point.
Thank you so much, Jason Farley there at Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up a bit later on Balance of Power on TV and radio, United States Commerce Secretary Wilbur Ross. That's a conversation you don't want to miss. It's at 12 p.m. New York, 5 p.m. in London, and this is Bloomberg.
Assess the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with the Bloomberg Business Flash. The owner of the animal supply chain store Petco raised $864 million in an IPO. The company is returning to the public market 15 years after it was taken private. Petco will continue to be controlled by the current owners, which include CVC Capital Partners. Chesapeake Energy has won court approval for a reorganization plan that slashes about $7 billion in debt. In return, ownership is being handed over to senior lenders, including Franklin Resources. That caps a years-long effort to repair the company's finances. Chesapeake became bloated after repeated borrowing to fuel expansion. It entered bankruptcy last year. And China's President Xi Jinping is calling on Starbucks to help improve relations with the U.S. In a letter to the chain's chairman, Emeritus Howard Schultz, Xi said he hoped Starbucks would make active efforts to promote trade and cooperation and bilateral relations. Schultz has previously said that China is a competitor of the U.S. rather than an enemy. And that is the Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, Eileen Murray sees a catastrophe on the horizon. The former co-chief executive of Bridgewater Associates says the global economy is leaving behind millions of unskilled workers. And without swift action, these workers, she says, could be unemployed for years. Now, she discussed this next big risk with Bloomberg's Sonali Bazek.
It's like the current pandemic, just as all of the companies that were producing a vaccine had to work closely hand in glove with the government. Businesses need to work closely hand in glove with the Biden administration to deal with people that need to be retrained. And then I think let's step back to lower income people. I mean, in this COVID situation, there are children that their parents can't afford a computer for them to be educated online. And a lot of education's gone online. It breaks my heart. So how do we incent people to donate computers? To donate money to helping those people get educated. Give them a tax break. I don't know if that's the full solution, but the problem's getting bigger. So the pandemic, I think, has shown light on some of this in terms of a little bit more. But I really do think that if I were president, and I'm not, one of the things I would do is commission a group that would come back to me within 3 to 6 months that had the best minds in business and education and government to come back and tell me, how are we going to turn this around? How are we going to make America a place where people get a fantastic education and where America that spends all this money on education starts to rise in the ranks of educated people? It's terrible. I mean, we spend a ton of money as a country on education, and look at where we are in our standing of how people are educated. And now we're going to add to that with this constant issue of not reskilling and not upskilling.
Are you worried about the recovery of women and economic empowerment coming out of this crisis, given that they were more hard hit in this pandemic?
Yeah, I think women have been hit more. And I'm a big believer in incentives. And I'm a big believer in transparency and disclosure. I don't think that we have made enough progress with women. I think the pandemic, and this happened when we had the financial crisis, when women were hit more adversely than men, and we started to see step backs in the progress we made on diversity. We're seeing it again. I think companies should have to disclose basically in their financial statements, here's what we're doing with diversity and inclusion. Study after study after study, we don't have enough time to go through it, has demonstrated that companies that have diverse workforces do better. So shareholders and investors should insist upon this, as far as I'm concerned. And I think that, what NASDAQ came out with was great. I think, what was it, a month ago, where they challenged the SEC to start, forcing companies to come up with ways to have, at least one diverse person on their board. And so those are the kind of things that I think need to happen. Women have been hit more in this pandemic than others. And I think that's going to continue to happen if we don't start to put pressure on and put incentives for companies that do this well. And companies that don't do this well, put pressure on them to really rethink this.
A couple of weeks ago, we had a conversation with Raj Cohen, the Sullivan and Cromwell CEO, and one of the things he mentioned was he believes that under the Biden administration, that regulators are likely to start putting more pressure on banks by rule of law to make sure that they have more diversity among its ranks and are serving their customers better. Do you see that ahead of you too?
I don't know if that's going to happen, but I certainly can hope. But hope is not a strategy. I do think if we do that, it'll put more pressure on retraining and reskilling some of these parts of the population that get displaced in financial crises or in pandemics, et cetera. So if I have to do something, people are very clever and creative. They'll figure out how to do it. So like I said, 10 years ago and before that, I was not a big fan of any kind of quotas or government regulation in this area. I'm a big fan of it now because I unfortunately think that's the only thing that's going to make it work.
Well, that was a former co-chief executive of Bridgewater Associates, Eileen Murray, speaking with Bloomberg's Shonali Bazak. In the meantime, this is a picture for the markets. The focus firmly on, of course, what we're seeing in treasuries. Treasury yields rising with stocks after a report suggesting that President-elect Joe Biden plans COVID-19 relief of about $2 trillion. Now, we understand that Biden's advisors recently told allies in Congress about the cost of the package. That's according to the report. In Europe, if you look at the stocks index 600, it's up. Automakers, miners, banks leading the gains, and then Carrefour shares falling as much as 5% after the French government expressed opposition to Canada's Alimentation Couche-Tard buying Carrefour. I'm also looking at a couple of other things. The government crisis, constitutional crisis in Italy, unclear what will happen, but it's had a bit of movement on the Italian 10-year yield, currently at 0.489. Now more Bloomberg surveillance is coming up ahead, this time simulcast on radio and on TV. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
Generation's biggest problem.
Climate change is happening.
and the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Of the virus, the pandemic, and the vaccines will really determine the course of the future economy.
The economy has shown fairly good resilience to this third COVID wave.
Suddenly, the whole street has woken up to this idea of cyclicality being dominant in 21.
You're likely now to see some churn. You may see a pullback in markets.
Volatility kills people's confidence, but volatility is when you can make a buck.
If we just have a recovery in 2021, that's a failure. We need to have a boom.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. John Farrow, Lisa Abramowitz, and Tom Keene, a simulcast, Bloomberg Radio, Bloomberg Television. Farrow gone missing. We believe we've had a sighting on Capri. We'll continue to monitor the travails of John Farrow. We welcome you on an historic day after what we observed last evening. Lots of good reporting from Washington, but much more going on in the markets. And Lisa, Greg Villiers just publishing not $2 trillion, but topping it out. There are $2.2 trillion to look forward to a Biden administration.
Yeah, Joe Biden's going to be announcing that plan probably later today. That is the expectation here. What I find most interesting is the expectation that Republicans are going to sign on in numbers that have not been seen in previous administrations for a very long time. I think that this is the highlight of this entire turmoil in Washington, D.C. Does it bring Congress together, Tom?
Well, we saw that yesterday with the changing the waves of tone of just Democrats united, but Republicans shifting as well, moving from 5 to 10 Republicans voting for the impeachment of their president. Let me do a data check right now. Futures up 5, Dow futures up 82. VIX in a stick over the last day from 23 level down to 22.19. Can't wait to get to Michael Purvis to talk, Lisa, about the Pacific Rim. But there we see yen with a 104 level, and we're watching some of those EM currencies as well for dominance. In the yield space, Lisa, I would suggest 1.13 on the 10-year is important. We're not there yet.
No, the idea here is, and I love Jim Reed of Deutsche Bank coming out and saying that in 7 business days, the first 7 business days of the year, we've done a 360 on taper talk. We both had taper talk, the discussion of perhaps the Fed stepping away, and then you had all the Fed officials coming in and saying, not going to happen. What I'm watching today, 8:30 a.m., U.S. initial jobless claims. We are expecting to see a deterioration in the labor market as the coronavirus continues to take hold. Tom, we will not be remiss in talking about the fact that 4,400 Americans died on Tuesday. It was another record day of deaths. We are almost to 400,000 casualties in the United States from COVID. This is taking a toll personally from a health perspective as well as from a labor market perspective. 12:30 p.m., Fed Chair Jay Powell to speak. We are expecting him to further put the kibosh on taper talk. We have heard that from Vice Chair Clarida yesterday. This will be the ongoing theme, trying to dampen any kind of concern in markets. The Fed will back away. At 7:15 p.m., Joe Biden is set to introduce that new COVID stimulus plan. $2 trillion, $2.2 trillion, $1.9 trillion. Either way, these are huge numbers, and people are expecting some Republican Congress members to sign on. Just to give you a sense, No GOP members signed on to Bill Clinton's first initial plan when he came into office, and only 3 when Barack Obama came into office. So this would be a historic departure to get bipartisanship in Washington, D.C., Tom.
We will see. And watching the markets again, oil, I should point out, 55.74 holding on. Jeffrey Curry scheduled to be with us with Goldman Sachs this morning. Right now, let us get to the conversation of the moment with someone who writes an eclectic note for Tallback and Capital. But far more than that, Michael Purvis writes an exceptionally sharp note about the Pacific Rim. He's nailed the dynamics of ADXY, that blended currency index ex-Japan. We get an update this morning. Michael Purvis on the Pacific Rim, is it enough of a showing to say a burgeoning global economy?
Well, I think it's certainly one factor to be looking at. You know, there's no question that away from the United States, that emerging Asia is the other big driver of global growth there. And you know, when you look across emerging Asia, you have a pretty good, certainly on a relative basis, very good sort of COVID platform with which to accelerate from. Obviously, COVID is continues to haunt every economy, every place in so many ways. But they've had a much better start. If you look at the City Surprise Index for emerging for China and other emerging economies in Asia, that's been really outperforming. And of course, the GDP acceleration there has been the strongest. One of the things I've been very focused on from a trading point of view is whether we're going to start seeing, a real sort of accelerated rotation into emerging equities. Most every equity index has been rallying substantially, but I think right now, if you pull up a long-term chart of the EEM ETF, for example, which is very China, Korea, Taiwan weighted, right, you'll see it's like on the cusp of making a lifetime high, just like the Russell did in November, and that always gets my attention.
Well, I mean, this goes to your theme of re-emerging EM. Okay, great, they re-emerge. Do they do it again through export might? I mean, is the formula the same as previous buoyant EM, or is there something different this time?
Well, I think when you talk about EM, it's always a moving target in terms of what is really happening underneath the surface there. Certainly you've got this sort of longer-term transferal from an export China to more of a domestic economy China, and you've got the sort of the techification theme of throughout Asia, that outside of Silicon Valley, that's the other place you can really find some of those companies, and they're different, obviously different business models with different attributes, but there's a lot to be said for there. And I think one other point I like from a investment and trading point of view is that while the valuations on, and again I'm coming back to the EEM, those are high. It's about 15 times Bloomberg consensus estimates. But on a relative to the SPX or to sort of global X emerging market indices, it's actually at very, very low levels. So every equity index is at record high levels of valuations, but the relative valuation there is there. So I actually think this sort of rotation theme where we saw people getting out of big cap tech in the U.S., coming into cyclical value, small caps in the U.S., that's going to continue, but I think it's going to we're now poised to accelerate or transition from that type of rotation into more of an emerging market rotation.
And Michael, I will argue that a lot of people have come on this show and said just that. And John Authors of Bloomberg Opinion put out a great column about how this was supported not only by the economic recovery in the region, but also by some of the policies by monetary authorities. A big backdrop, though, to the rush to emerging markets has been the low yields in the United States, the idea that there is no alternative. Looking right now at 10-year yields of 1.1%, has a $2 trillion stimulus package passed the next 3 months been priced in here?
I think largely it has been. Biden came out with a $3.7 trillion plan on his website there. I think, I was hearing your discussion with Tom before I got engaged, and it's a reminder that there's always political risk is a persistent theme here into 2021. But one of the facets of I think you have to take into consideration when you're talking about the dollar, and you're talking about rates, is that the move higher we've seen since the Georgia runoff in the 10-year Treasury yield is almost basis point for basis point. It's moving basis point for basis point with the rise in the money markets futures curves back in 23 and 24. In other words, there's no risk premium being built into the 10-year Treasury yield. It's really just about what the market's pricing in one more hike or so down the road. That's very different than sort of a big new fear premium because of this spending. Now that could change, but right now what it says is it's an orderly sell-off, which also is a risk on, and I would also suggest probably dollar weakening condition.
This is an important point, Michael, basically that the Fed has greater influence than any fiscal policy or, frankly, fundamental economy over the bond market, which sets rates and valuations for everything else. Yesterday, Bob Michael of JP Morgan on Bloomberg Television said the Fed is essentially, whether deliberately or not, enabling modern monetary theory, suppressing the cost of borrowing for the United States in order to do so as much as possible. Do you see political risk for the Federal Reserve as being something that is significant for markets, perhaps beyond what is currently expected?
Look, I think the specter of political risk has been growing, but I still think it's really pretty remote, and particularly sort of with Biden coming in as president next week and all that. I think, with this sort of solving for normalcy, I think it's pretty remote. With that being said, I think you do see this trend. Look at, Yellen is, now at Treasury. You saw Christine Lagarde coming into the ECB, arguably there to nudge the Germans into fiscal policy. So you are starting to see a broader sort of integration at some level of fiscal and monetary policy, which I think raises all sorts of questions there. But it's arguably inevitable given that all these interest rates are extremely low and the fiscal spending seems to only be more obvious and relevant, given the sort of the broader backdrop.
Michael Purvis, thank you so much. With Tallbacken this morning, greatly appreciated. Lisa, I look at renminbi. It's an exceptionally elegant chart, and it's got huge continuing renminbi strength. It's well behaved and has every sense of driving stronger yuan, which clearly is a signal of that Pacific Rim Mr. Purvis was talking about.
Yeah, and interesting in that John Author's column, Bloomberg Opinion column that came out this morning, it was talking about how even though the yuan seems strong on a relatively recent basis, there is more room for strengthening before it starts to impact the economy. This is one of the big question marks when the PBOC will get involved and try to suppress that valuation in order to boost its imports and exports. Kind of an interesting factor here.
Well, we're halfway through 2021, or at least it feels that way.
Yes,
January
it does.
14 this morning. We're going to continue on our themes. Thank you for the email saying thank you for not doing Washington 24/7, but we still focus on the nation's capital. News overnight as well. We get a briefing from Greg Valliere. We'll do that next. Coming up later, Michael Schumacher, Wells Fargo Securities head of macro strategy, as we reassess $2.2 trillion ways. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. Now it's up to the Senate. The House put President Trump in the history books, impeaching him on a single charge of insurrection. It's the first time any president has been impeached twice. The resolution was supported by all Democrats and 10 Republicans. It now goes to the Republican-controlled Senate, which has refused a request to bring senators back and start the trial before next week's inauguration. Meanwhile, President Trump called on Americans to unite and avoid further violence. He spoke on a video released 1 week after his supporters stormed the Capitol. The president condemned the violence, and he said it goes against everything his movement stands for. He didn't mention the impeachment vote. President-elect Biden's advisors reportedly have told lawmakers a coronavirus relief plan will be in the $2 trillion range. That's according to CNN. Biden unveils that proposal today. It's said to include direct payments to American families and state and local funding. In China, the trade surplus hit a record high in December. Exports rose more than 18% in dollar terms from a year earlier. Demand for medical supplies and electronic goods surged in 2020. For the full year, the trade surplus was 27% higher. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I've said to other women as they've taken on their CEO roles, I said, get ready, because everything you do is magnified. Everything you do is personalized. I can't tell you that that's fair, but it's what happens.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
He must go. He is a clear and present danger to the nation
that we all love.
The 117th Congress must understand that we have a mandate to legislate in defense of Black lives. The first step in that process is to root out white supremacy, starting with impeaching the white supremacist in chief.
A vote to impeach would further divide this nation. A vote to impeach will further fan the flame of partisan division.
The President took an oath to defend the Constitution against all enemies, foreign and domestic. Last week there was a domestic threat at the door of the Capitol, and he did nothing to stop it. That is why, with a heavy heart and clear resolve, I will vote yes on these articles of impeachment.
What you see there, and this is really important, thank you, McKinnon de Kuyper, for just a terrific set of emotion there. Mr. Newhouse of the 4th District of Washington State, in a district that is significantly a Trump district, going against Mr. Trump last night, one of 10 Republicans voting in the drama of the moment. We pick up the pieces with Kevin Cirilli, our chief Washington correspondent. Kevin, Speaker Pelosi's letter to the House was stunning last night, with $5,000 and $10,000 fines if you come in and you ignore the metal detectors and give lip to the Capitol Police. Would you explain the "don't tread on me" contingent within the Republican Party that resides in the Capitol?
Well, it's going to be exposed in an investigation, and I think that is really the message behind Speaker Nancy Pelosi's letter yesterday, which was that there is a lot of investigative work that the new Congress is going to have to look into. And I keep going back to this point. Whether or not the Senate trial, which is now all but likely going to happen in the once President-elect Biden is sworn into office, there is a lot of investigative work that is to be done, not just in the Congress, but also at the state level. And individuals really are going to face some legal exposure from states for peddling a conspiracy theory.
Kevin Cirilli, Greg Valliere with us in the next hour. I thought his note this morning was very informative. And he talks about the trap for the president with his path to further pardons and how it could move Senate Republican votes from 10 towards that number of 17 votes. Are the two linked?
Yes, and I think Congressman Newhouse in that lane of conservatism is going to be remarkable to see. Congressman Newhouse is actually a Republican who is building a coalition of lawmakers from Western demographics and uniting them around much more so agricultural issues and environmental issues such as forest fires, much more so than some of the more old school conservatism alliances. I bring that up because there's an opportunity for a new type of Republican to emerge in that region, and that really could provide a new element to the Republican Party, and I think you're going to see the birth of that really during the Senate impeachment trial, regardless of what the outcome of that trial is.
And meanwhile, we have Joe Biden, who's set to announce his plan for the COVID stimulus later today. He's hoping and expecting that some Republicans will join the Democrats to get this passed. And yet, if you take a look at recent polls, the vast majority of voting Republicans still back President Trump, think that he should not resign, he should not be impeached. What's the real chance right now of true bipartisanship, given the rank and file and where they are in sentiment?
Well, you know, I think it ultimately will come down to just how the country moves forward. And, you know, I think historically speaking, and I alluded to this yesterday, President Ford's pardoning of former President Nixon was heavily criticized at the time. And that's really the only compass and historical parallel that we can draw here about a path forward toward ushering in a new era of political calmness and stability. And so I think, candidly, it's going to take time. And the recess that the Senate is in right now, Leader McConnell has clearly forecasted that he believes the best path forward is to take a breath and to not rush a process. That's his position. Democrats have suggested that the better path forward would be to move more quickly through this. But I have to say, I mean, to have so many prominent Republicans not just in elected office, to be calling on the president to resign is remarkable. I think that if you're playing this forward in terms of a narrative, Vice President Mike Pence will eventually write a book, give an interview. So there's a lot more coming.
Yeah, a lot more coming. Kevin, it's hard to overstate how historic this moment is. I mean, I was really struck by the pictures of the Capitol building being used by barracks, by National Guards members. This is the first time they've been used as barracks since the Civil War. We are hearing about threats to the Washington, D.C. region as inauguration comes closer. How safe is it right now? I mean, how serious is the threat of some true overwhelming violence on that day?
Well, two things. First and foremost, I've interviewed lawmakers who say that they are in close contact with FBI officials and in order to protect the Capitol as well as state capitals around the country. But secondly, to get to your other question and to tie it with this one, I can't stress this enough. Capitol Hill is a campus. It's equivalent to, you know, all of the ecosystems and small businesses around the New York Stock Exchange. And I say this because the entire political industry is in a moment right now where they are saying, is this the type of office we want? How do we move beyond the images of the Capitol building being used as barracks? How do we heal and move forward? Is this really the type of political democracy that we want to see reflected back and that we want to be a part of reflecting back to the country? And that's a self-reflection that is incredibly deep. It's not a soapbox. It's very real. And when I talk to Republican staffers, Republican lobbyists, Republicans who have spent decades in Washington, D.C., and also Democrats in every parallel that I just drew there, that's where their headspace is at, is how does this moment evolve so that this does not become the norm, that Washington, D.C. does not look like a barricade around it when people are going into work.
It'll be interesting to see how the process plays out. Kevin Cirilli, our chief Washington correspondent, perhaps a quieter Wednesday than what we've observed in recent days. Sound on Bloomberg Radio somehow suggests Cirilli will prepare you for President-elect Biden's speech on stimulus or stimuli. And again, the working number there, 2.2 trillion at the high end right now. Greg Valliere joining us in the next hour as well. Lisa, your thoughts as we look at those shocking images of our nation's capital?
Well, it's a historic moment, and it's a real gut check for particularly the Republican Party, considering the support of President Trump that's ongoing in a number of different polls that said his approval rating has gone down. But Tom, how do we move forward from this moment? And a lot of people are looking at 2021 and saying, we want our money back. We thought it was going to be better than 2020.
Yeah, I would look to enforcement in the judicial system to show their card here in the coming days. Last I saw, the number potentially arrested to be 170, but rising, it seems, every day. Interest rates are rising as well. Michael Schumacher joins from Wells Fargo. The 10-year yield 1.10%, futures up 5 on radio, on television. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
How different will the beauty market be in 2-3 years?
We'll see. You know, it's too early to tell. But I would bet that they won't change fundamentally. You know, I have been through many crises, and it won't be very different.
Bloomberg Surveillance. Good morning, everyone. Lisa Bramwitz and Tom Keene, John Farrow on sabbatical this morning on radio and television. Good morning. And we affirm that we need a stock check. I'm still trying to get into a firm, 97, giving me a window to 103 this morning.
Wait a month.
Romaine, distract me from a firm. What else is out there?
All right, well, let's start with J&J because, of course, the development for vaccines still going on despite everything else going on out there. Some encouraging early safety studies out of this one-shot vaccine that J&J is developing. Not only is J&J moving higher, but keep an eye on some of the other vaccine stocks like Novavax, Moderna, Pfizer as well. BABA in the news. Alibaba, the ADRs there could move around a lot today. A report out of Bloomberg News. According to people familiar with the situation, the U.S. won't ban Americans from investing in Alibaba or Tencent. That could be good. Not good here. JW Nordstrom. You know, come a long way from when that single shoe store back on 4th Avenue on Pike Street. Holiday sales down 22%, Tom. More importantly, they're guiding profit margin is down here, saying about 500 basis points for the fourth quarter.
I got to go back to Alibaba, and I mean, I don't mean to make light of it. Is it right that Mr. Ma, like Mr. Farrow, is still missing?
Yes, it is.
I don't think I'm going to touch that.
You know what? I will touch that.
Yeah,
okay, Tom. There is the theory or the common line from people familiar with the matter, as reported by Bloomberg, is that Jack Ma is trying to keep a political low profile. But the belief is that China would not torpedo its tech star. But this is sort of the push-pull there in terms of that. So Romaine, continue. Pick back up.
Lisa, thanks for saving me here. Let's pivot there. Let's talk about space, Tom. It's the final frontier. You type in ARK on your Bloomberg terminal. Whatever it fills in after that, it's probably up. That's Cathie Wood's empire, the ARK empire. She's now moving into space, Tom. Virgin Galactic, the biggest mover here. I didn't put up the other movers here because they're all SPACs, and I knew that would probably enrage you here. But a lot of people going there. Affirm, there's your Affirm, Tom. I don't know where your market order stands right now, but you got them to an intraday high of 103 yesterday. You closed at 97. It's pushing back above 100, Tom, so you might miss out again. Well, get your broker on the phone.
Honestly, Tom, this is fascinating. I actually agree with you that this is one of the biggest stories, because when you have an IPO that doubles in value in the first day, some bankers are getting pulled to the back room and saying, what happened?
And, you know, full disclosure, Romaine, unlike in the afternoon, we show all of our conflicts. I bought Kennel Fee off of an Affirm account, the new puppy. I got, you know, I had to do like 18 months of Affirm.
Well, you know, Tom, that's good for you. You know, their Petco's supposed to price its IPO any day now. You should be all over that.
I should if I could get 8,000 shares like you. Continue. What's this gorgeous chart I've got on radio and television?
This gorgeous chart is basically just talking about the outperformance we've seen as IPOs. As Lisa was saying, these one-day pops we're getting, and really the pops that continue after that first day, has really created this outperformance of IPOs versus the broader market here. Obviously, that Affirm thing was off the charts here. And a lot of people are talking about this, too. It's not just about how it's priced and whether the bankers got it right or wrong. It's also the whole idea, too, of the availability of shares. Remember, a lot of these companies are coming to the the table with maybe 10% of the shares that they have out there, maybe even less than that. There's a lot of talk here saying that if you can get some of these insiders to get those shares out there earlier, get rid of some of these lockup periods, you might have a little bit more equilibrium how these things perform on the first day of trading.
Romaine, one question. Yeah. What's the tone of the sell side now? I saw Danaher and others out with earnings, BlackRock out with earnings. What's the mood you see in your voracious reading of the sell side?
The mood is pretty much up. I mean, everyone seems to think this is going to be the year of an earnings rebound, not only of an earnings rebound, but back to sort of those double-digit growth rates that we had pre-COVID-19. Also expecting margin expansion. And Tom, if you haven't started your SPAC yet, as soon as you get off this show.
I'm looking for gluten-free SPACs.
You're done in about 30 minutes, right?
Yeah, Romaine Bostic, thank you. Gluten-free SPACs is what I'm heading towards. Lisa, save us, please.
Yeah, you're going to IPO your triple levered cash fund through a SPAC. I will say, you know, I got to say, these IPOs, though, talk about froth, and a lot of it has been spurred by the ultra low interest rates, the idea that the Fed has your back no matter what, and that was just sort of edified over the past 7 business days when you have the Fed officials who came out and said, maybe we'll start thinking about tapering, being shut down, smacked down, and then some by other Fed officials coming out and saying, no way, not a chance. Mike Schumacher, Wells Fargo, head of rates and macro strategy, taking a look at the ebbs and the flows of the bond market. Right now, we're looking at 1.1% on the 10-year yield. Do you think that the bond bulls have gotten ahead of themselves in the wake of some of these naysaying Fed officials who came out and said that we have your back? Do you think that yields could rise further from here than people are expecting?
We do, Lisa. So as far as the Fed commentary goes, we think it's just way too soon for the Fed seriously to consider tapering. The Fed learned its lesson in 2013. That was a bad one. And really what we would focus on is if Jay Powell or Richard Clarida comes out and says, oh, yes, tapering this year seems like maybe a good idea, then the market should be concerned. But until then, we're really not too worried about it. We do think yields go up from here.
Is it because the Fed is going to allow them to, that they're not going to necessarily increase their purchases? Or is it because inflation is going to start to pick up perhaps more than people are expecting?
Yeah, it's really more the Fed from our perspective. So inflation, we do think, rises over the course of the year, but not terribly quickly. Over the next few months, we think inflation is fairly subdued. We saw the numbers yesterday on CPI. Nothing amazing there to report. So we think a fairly low inflation path until, let's say, May, June makes a lot of sense. So in the near term, it's the Fed. How much is the Fed going to really allow yields to go up? So far, it's been fairly tolerant. We think that continues, but we're not calling for yields to go crazy. So from our perspective, a really huge number would be something like 150 at mid-year, for instance.
Michael, do you see in the economic literature, in the monetary literature, any discussion of the appropriate fiscal statistic? All of a sudden, with the changing of the guard, we're at 2 trillion, 2.2 trillion. Who knows where that number will be tomorrow, Michael? Is there a number within the economic zeitgeist where they say that's too much?
Not really. This has really become more of a political discussion, Tom. You've got to think about also how these economic models work. They're linked to looking at past data. And how much past data do we have on pandemics? Not a heck of a lot. So there's one people point to from a century ago. Doesn't really give you a lot of comfort. So there's really no particular number you can point to and say, this is it.
What is your best bet right now? You know, we're doing so much theory and the cosmopolitan political economics right now of Washington as well. What is your delegated best bet at Wells Fargo?
Well, we're, of course, big fans of the Tom Keene SPAC, but when you get past that, we do think yields tick up, let's say.
He's just muttering to himself about his plans for the SPAC. Carry on, Mike.
Continue, Mr.
A little bit
Schumacher.
cheesy, but nonetheless. Yeah, yields go up, we'd say, by, call it 30, 40 basis points, maybe at the outside, 20 to 30 more reasonably over the next few months, call it the next 4 to 5 months. That seems like a pretty good play to us.
In the meantime, a big driver of recent bets of yield rising was the weakening dollar, and this is one of the big consensus bets. It's been cooling off a little bit, some people closing out. Morgan Stanley actually moving away completely in the near term from their weaker dollar call. Where do you weigh in on this? Do you see the dollar strengthening from here as people take a look at the situation in Europe, they see the pandemic and how bad it's getting, and they say maybe the U.S. isn't so bad?
Yeah, we do see some strengthening, Lisa. It's a good point. We look at the dollar and say longer term, probably not great, but near term, how about a bear market rally? These things happen. The dollar's really been beaten down pretty dramatically over the last 7-8 months. As you point out, Europe's doing poorly from a COVID perspective. And also with U.S. yields going up, you've got yield spreads going up quite a bit too. So the yield advantage for the U.S. over, let's say, Germany, France, certainly Japan, has increased pretty dramatically over the last couple months. That should give the dollar at least a near-term boost.
What's the compass for this, Mike? I mean, Mark McCormick of TD Securities came on and said that he's tracking the vaccination schedules in different nations to determine which country to invest in, that there is a correlation there, or at least some sort of association between the strength of the economy, the strength of the currency, and vaccinations. What are you tracking to determine whether the dollar falls or rises?
Yeah, it's not so much the vaccination progress, although it's a big component. Really, day to day, that's a difficult thing to measure. If you look at some of the data, Israel is way out in front. Everyone else is not doing all that well. So we wouldn't really aim at that. We focus on more concretely, I would say, is what do the central banks tell us? What do we see in terms of market reaction in interest rates? And do we see bond market yields rising enough to give the dollar a boost? That really has been the big driver, we think, over the last few weeks as far as setting the dollar up.
Michael, the dynamics of the emerging markets. We talked to Michael Purvis earlier about the Pacific Rim. Wells Fargo's always had an affinity to watch the Pacific Rim. Has a rally been had, or is there much more to go?
Perhaps a bit more. Again, here I would say it's a function of how accommodative are the big central banks. I know we talk about them all the time, but when you think about activity in the PAC Rim, it really is driven by U.S. dollar trade for the most part. So if the Fed stays with a very lax policy, we think that's probably a pretty good sign for that area.
Mike Schumacher of Wells Fargo, thank you so much for being with us. And we talk about rates and the economy. Right now, Tom, we have about an hour, about 50 minutes until the initial jobless claims report from the United States. And Tom, one thing that we really don't stress enough is the ongoing bifurcation in the labor market.
Yeah.
Lael Brainerd of the Federal Reserve yesterday came out and said that the lowest quintile of U.S. earners, the unemployment rate there is more than 20%. That compares with less than 5% for the top quintile. Just talking about how this gap has widened out, and you just wonder what the longer-term structural consequences of that.
This is really important in two fronts. One, a quintile, folks, is a fifth of the public, and it's not a decile. It's a real hunk of the public with that 20% rate. Lisa, I'm so glad you brought it up because the week has been so nuts. I didn't realize it was Thursday. And so, you know, you bring up claims and, you know, we get another statistic, whatever it's going to be. I don't have it in front of me, but normal is 220,000 and we're miles from it.
It's 787,000. That's the expectation.
Excuse me.
Picking up
Would you like to go to fewer digits as well?
Yeah, you know, I'm trying to work for my vacation at Capri as well, Tom. You going to weigh in on it?
I don't know. Mike from the Bahamas emails in and says Abramowitz is killing it. You might as well go to take it up. 787,436. You're worse than Pharaoh. Jeez.
Hey, is that a compliment? Thank you. I'll take it. I will say I do track this
just
because
we've been football free this week.
Yeah, I know. We're going to have to change that, I will say. You know, honestly, it is fair, though. You could have come back at me and said, Michael McKee will say those numbers don't matter anyway because there's so much noise. So there is a question of what the significance is of 787 or 786. Nonetheless, very big, Tom, and that is a concern for a lot of people.
Lisa, what I see, which is so important, is what I see in the streets. And I know every street of America is different, but there's some huge stress out there.
Yeah. It's a tough time. Coming up, Matthew O'Connor, Deutsche Bank, lead U.S. bank analyst, will be talking about bank earnings. Coming out tomorrow, we'll also be perhaps talking football, maybe. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. President Trump has become the first president ever to be impeached twice. The resolution was approved by all Democrats in the House and 10 Republicans. The president was accused of one count of incitement of insurrection for last week's riot at the Capitol. The next move is up to the Republican-controlled Senate. It's already rejected requests to bring senators back early. Senate Majority Leader Mitch McConnell says he hasn't made a final decision whether to vote to impeach President Trump. McConnell sent a note to colleagues after reports that he had agreed to vote in favor of impeachment. He wrote that he intends to listen to the legal arguments before he decides. And National Guard troops have taken up positions in the U.S. Capitol. More than 20,000 Guard personnel have been summoned. That's turned the Capitol and its park-like campus into an armed camp. Authorities say there's a major security threat around next week's inauguration, and they're trying to prevent a repeat of the riots at the Capitol. China's President Xi Jinping is calling on Starbucks to help improve relations with the US. In a letter to the chain's chairman emeritus Howard Schultz, Xi said he hoped Starbucks would make active efforts to promote trade cooperation and bilateral relations. Schultz has previously said that China is a competitor of the US rather than an enemy. And Goldman Sachs is just one step closer to offering checking accounts for Main Street. Goldman's consumer arm, called Marcus, will work with digital payment startup Marqeta on the project. Goldman plans to use Marqeta's technology to issue debit cards into mobile wallets. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Pretty optimistic view on the outlook, looking through this difficult first quarter, but be careful because there's a lot of risk and a lot of good news priced in.
Andrew Balls, PIMCO, and the message is be careful out there. That was a good conversation. Look for that on Bloomberg Digital. Lisa Bramowitz, Tom Keene, John Farrell, the simulcast on Bloomberg Radio and Bloomberg Television. And if you are part of global Wall Street, and particularly American Wall Street, there is no question this is the conversation of the day. The goal in the game is to win the trophy, and the trophy is the II Award. That's Institutional Investor, and there's a bunch of permutations of it. And if you're lucky, you win it once, you win it twice. Hat trick, you win it 3 times. That's rare. Matthew O'Connor spent a decade winning trophies at Institutional Investor with UBS and then on to a storied career at Deutsche Bank. And we're thrilled he could join us this morning on the big banks. Matthew, the money question is the banks come out of the bottom and they regress back to a mean, or can there be a golden age out there where they go through the mean and onto prosperity? Which is it?
Thanks for having me. And we are still quite bullish on the banks. And really, it's the same reasons since we upgraded the group in early September. And it's a pretty simple story. They've lagged the market quite a bit, even with the recent run since the crisis. Macro conditions are going to improve throughout this year, driving interest rates and loans higher. And the concerns about long-term earnings power being significantly impaired, we think, are overblown. And you put that all together, and we still see room for the banks to run.
Matthew, Charles Peabody, the wonderful analyst in your area of crime, has been brilliant on the use of cash by the banks. Do you start January of this year understanding that the banks have so much cash, they're going to use it to give to shareholders?
Well, we did get some good news from the Fed in December, allowing the banks to start resuming buybacks this quarter. It'll be at a measured pace. About 1% of outstanding will be the capacity for most banks, but it's moving in the right direction. The banks have a lot of capital. The banks generate a lot of capital, and we do expect buybacks to accelerate throughout this year.
So we're going to be getting J.P. Morgan fourth quarter earnings tomorrow. That will be the first kickoff, followed by Citigroup and Wells Fargo. They all have slightly different stories. I'm looking at J.P. Morgan shares up 40% since the beginning of November. Matt, what are investors looking for to go further from here? What are the key metrics that you're watching?
So everybody knows that capital market revenues like trading and investment banking fees are going to be strong in 4Q, and the outlook seems positive. I think the real key is net interest income. Even for the big diversified banks, is still over half of total revenue. And this is driven by, as I mentioned before, interest rates and loans. And the outlook for that is really, I think, what investors are looking for to have sustained gains in the group. We do think net interest income is bottoming this quarter, and we hope the banks will be cautiously optimistic in their outlook throughout 21.
Can banks continue to rally if yields don't continue to rise?
Well, it's certainly possible you get a little bit of a pause in the very near term here, but I'm in the camp that the longer end will move higher as macro conditions improve. We've been assuming the 10-year averages between 125 and 150 in the back half this year, and that's high enough to support further gains in the banks.
Matt, when we look at the banks, we talk about the consolidation, we talk about the business plan. I noticed the wealth management activity yesterday with Corbett Fraser over at Citigroup. Great. What is their greater strategy, to consolidate and be simple, or are they going to get creative in their new prosperity?
Yeah, it's a good question. There's two what we would call special situational stories out there, Citi and Wells Fargo. And, the market cap of these two companies is very big, and they can't be ignored. We strongly prefer Wells Fargo over Citi.
Why?
Because we do think there's a lot of questions to be answered at Citi. Our estimates are well below consensus for next year at Citigroup. We do think there's going to be some exiting of certain businesses. We do think there's going to be some simplification of the customer base, and we think that's going to reduce earnings more than expected.
What is the strategic distinction of the new Wells Fargo?
Our view is that it's more around the edges as opposed to transformational shifts. So they came out with some new business line reporting the other day that I think supports that, and we expect to get more details on this tomorrow. But again, we think it's more around the edges with a relatively modest impact to earnings. And the real key with Wells is obviously getting past the asset cap and then being able to take out costs, which we think they will be able to do over time.
So traditionally, Democrats were thought of as harder on banks. We have now a Democratic administration, Democratic-led Senate and House coming in. Nobody's talking about banking regulation. Is that narrative dead?
Well, I think the most important thing from here is going to come back to the macro environment. If the economy is getting better, if people are spending, people are traveling, people are borrowing, you'll see higher volumes across banks, businesses. You'll see higher rates, so you have wider margins. And obviously, you'll also see quite stable or improving credit quality. I think that's really 80-90% of the story with banks. There's certainly always kind of regulatory and political risks that you could think of, but I think those are a distant second to all the macro stuff that we're focused on right now.
Matt O'Connor, don't be a stranger. Love having you on with Deutsche Bank, just because a really interesting record on following the story of these big banks. Lisa, to me, what's absolutely fascinating here is how so many people got the path right coming out of the financial crisis, a timeline of 3, 4, 5, 7 years. And now there's sort of a mystery to it.
Yeah, although a lot of people saying that the three components of banking are going to be firing on all cylinders. You're going to have the interest income. You're going to have that increasing because a lot of people expect yields to rise. You have trading revenues expected to remain high because the Fed is backstopping a lot of the market. And then you have just the volume of loans out there as the economy expands. And these are sort of the three aspects that Dan Suzuki of RB Advisors was talking about yesterday. The question is, Tom, how much has that been baked in when you look at a rally of 30-40% in just a couple of months in these stocks, especially if we don't get yields going higher and some of these expectations don't come to fruition?
Do you think they're having if the coffee that Jamie Dimon has or Brian Moynihan has, it's way better than we have it. They've got, fine china and, the whole thing.
You've got to think about the China. You missed the China.
Well, they're probably having it on China. Do you think they're talking about a firm this morning? Like, do they build their own firm?
Honestly, look, they're going to be investing a lot in tech, right? I mean, is that the question here? And the other issue is how much are some of these fintech firms going to become rivals, especially as the OCC gives bank charters to some of these technology companies? I don't know if that's actually realistic, but they're all trying to figure out how to adapt to a new reality and lend.
I was in 4th grade and Walmart was trying to get into the banking business. We've been waiting. Remember?
They're still
banks
trying.
and grocery stores or whatever.
Trying.
Forever and ever.
You remember that from 4th grade?
Yeah.
So I'm trying to get you to open an account.
I was in charge of the family finances.
I'm sure you were.
Sam Stovall will say
All
this.
cash.
This is great. I don't have a job. Matt O'Connor on the Sam Stovall of CFRA. On radio and TV, this is Bloomberg.
y ver cómo te tiran algún objeto o cómo notas la sensación, ¿no? Como que te golpean a ti. O yo creo que hace que empatices mucho con los personajes y que sea todo mucho más real.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The course of the virus, the pandemic, and the vaccines will really determine the course of the future economy.
The economy has shown fairly good resilience to this third COVID wave.
Suddenly, the whole street has woken up to this idea of cyclicality being dominant in 21.
You're likely now to see some churn. You may see a pullback in markets.
Volatility kills people's confidence, but volatility is when you can make a buck.
If we just have a recovery in 2021, that's a failure. We need to have a boom.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A boom, perhaps, that people are starting to price in. Good morning. This is Bloomberg Surveillance on Bloomberg Radio and Bloomberg Television. Jonathan Farrow, Tom Keene, and Lisa Abramowitz. John Farrow off today, but the hope for a new economic dawn continuing today, Tom, with people cycling into some of the riskier equities on that $2 trillion hope coming from Biden.
Well, I was going to say it takes $2 trillion to keep the economic dawn sun rising, and that's what we've got right now.
For now.
There's no question about it. Let's review this for people not up to speed on it, Lisa. I think it's so important. We were chewing glass with 300 billion, 400 billion. No, I want 800 billion. Bring it down. And with these elections, House, Senate, Democratic president, all of a sudden we launch up to 1.3 trillion. And look where we are this morning, Lisa.
Yeah, but the funny thing is that when we were talking about all the money that we were going to be pumping into the economy, initially bond yields were responding. Now,
yes,
I don't know if you can even call this responding. I mean, yeah, they're ticking up, but they're 1.1%. They're still incredibly low. People looking out there and seeing these dueling aspects of both a lot of fiscal stimulus and a Federal Reserve that's got the markets back.
Well, I got out the Farrow book of technical analysis.
Please.
You can hear about that, folks, on the real yield. Look for that tomorrow on Bloomberg Television. And Lisa, to me, it's like a 113. And as you correctly state, we're just not getting there. 10-year yield 1.1070, rounded up 1.11%. Curve steepening a little bit, fractional. Equity markets churning. NASDAQ doing better in the last hour. The only other thing I got, Lisa, to help out is oil 55.73 off that big bid we've seen.
Well, one of the big questions, just talking about the yields, yesterday, Bob Michael of JP Morgan, this is pretty controversial. He came out and he was saying that the Fed, for all intents and purposes, are enabling modern monetary theory, basically enabling the U.S. government to borrow trillions of dollars in debt without actually incurring higher cost of borrowing, and that this essentially is what they are doing to allow the economy to continue to grind higher, and this is why he's so much risk on. The question is, first of all, whether the fiscal authorities will take that grant and they will go with it, and that is what a lot of people are taking a look at this morning.
And I would point out today an important paper released by Adam Posens, the Peterson Institute, and this from Dr. Orzag, Robert Rubin, and also Joseph Stiglitz, the laureate. I'll be honest, I haven't had time to read it yet, but an important statement on our fiscal policy by those three noted officials. Right now, Lisa Bramwitz and Tom Keene on the equity markets with Sam Stovall. And Sam, I've got to start where we were with Matt O'Connor of Deutsche Bank. Thank you, Doug Cass, for emailing in a very sharp note where Doug Cass, almost trading Sam, would say the banks have come awfully far, awfully fast. Sam Stovall, that right now all love the banks. Do they, Sam? Is it too far, too fast for the banks?
Well, I think that we are seeing better numbers expected for this fourth quarter. Diversified banks were expected to be down 22% in that fourth quarter earnings, now off only 17.6. So things are looking to get a little better. Regional banks were supposed to be down 13.5, now less than 12.5, and things really haven't even gotten started yet. So basically where there is a vacuum of valuations is where investors are most likely drawn.
Yeah, well said. The other idea, Sam Stovall, that I think you've got so many decades of experience on is that corporations and CEOs, they adjust to the cards that have been dealt. Do you anticipate a lot of adjustment by companies in this year that will surprise with better margins down the income statement?
Well, I think you're right that companies basically say we don't like the uncertainty, and whatever cards are dealt us, we will work around them. That's why what's interesting is that every Democratic president since Woodrow Wilson has come into power backed by a solidly Democratic Congress. Yet with that, we've seen the market do very well in the first year of those 6 presidents, up more than 11%. And if you go back to including the Russell 2000, they've been up 16% in the first year of a president's term in office, rising in 8 of 8 times.
Well, but this is a very different year, and it comes on the heels of an incredibly unique dynamic. There's a question, how do you parse out the froth from the reality when you look at some of these earnings expectations that are baked into valuations?
Well, I think right now the earnings expectations need to improve. Right now we're looking at sub-$170 earnings for the S&P 500, which is causing the S&P to be trading at a 44% premium to its 20-year average NTM, or next 12-month PE ratio. I think we're going to need to see earnings that are approaching $200 a share in order to bring down the PE from that 23 plus to something closer to 18 or so.
So the other issue, the other aspect that's been influencing equities this week, this month, this year, has been the retail price setters. And I've really been struck by statistics showing that, for example, on Monday, retail traders accounted for 1/5 of all equity trading. If you just look at the top 6 most active stocks, which were penny stocks. How does this affect your investment thesis, if at all? Does it sort of create a flag for you that there's something amiss?
Well, yes, it does. Actually, I also anecdotally got phone calls from 2 nieces who have never invested before, who now want to invest. So, you know, is that like Bernard Baruch and Joe Kennedy looking to get advice from their boot black? So, yeah, that's a concern when you also see the Russell 2000 trading 37% above its 200-day moving average, the highest on record. That, too, is a concern that the market is in need of a digestion of gains.
What you are getting here, folks, on radio and television is the Stovall Clinic. What Sam Stovall just said there about what we do with Democratic President, House, and Senate is textbook looking at our history. Sam, what's our trap right now of looking at too much history and not the present of this modern market?
Well, I always like to say that history is a great guide, but it's never gospel. that even though, as Mark Twain once said, it might frequently rhyme, like the singer of the national anthem, sometimes it forgets the words. So you really do have to overlay historical tendencies with economic projections, fundamental forecasts, and technical considerations. And right now, the trend is your friend. And while we are likely due for some sort of a pullback, one occurs every 9 months, I still think that we are headed higher for the full year.
Okay, we're heading higher for the full year. Are you going to be like Ben Laidler or Tara Hudson and give me a double-digit number? I heard that with your history back to Woodrow Wilson. I know your great-grandfather was covering the street back then. But, Sam, are you going to go all double-digit on me?
No, high single-digit. I call myself a bull, but with a lowercase b. 4080 is our year-end target for the S&P 500.
We were talking about how the hope for a better future is paid with trillions of dollars of stimulus. How much is your thesis, is your prediction for year-end predicated on this idea of at least $2 trillion of additional fiscal support?
Well, I think fiscal support is already baked in largely to the market. Expectations are that we will come. I mean, I read Greg Valliere as well on a daily basis, and I believe that I'm going to be looking for Biden going big when he announces tonight. So I believe that that is factored in, and we're starting to see the interest rates and inflationary worries start to creep higher as a result of that. And now we're looking at a dichotomy between our economists and our technicians as to how high interest rates go. So it should lead to some very interesting trading, but I think the stimulus is important to ensure we have a strong takeoff in the second half.
And Sam, before we let you go, I'd love to get your take on the rotation trade, this idea that investors are going further into the banks, into other cyclicals, and away on the margins from big tech. Do you think that that has legs, or do you think that that's been made too much of?
No, absolutely it has legs. I published my barbell portfolio, which looks at those sub-industries that were the 10 best and the 10 worst from the prior calendar year. And the outperformance typically has been anywhere from 200 to 400 basis points, whether you look at the best or the worst. Right now, the bottom 10 sub-industry constituents are up 8%, whereas the market itself is up 1.6%. And chances are this ends up continuing through 2021.
Sam Stovall, just wonderful. Thank you so much. Just really, really appreciate it as well. I mean, Lisa, this is what's about. You go from Matt O'Connor out to Sam Stovall here, not only on the banks, but on the markets as well. I mean, there's some real depth of knowledge there.
Yeah, although I can't get over that Sam Stovall's nieces called him up to ask him advice, saying, should we get in?
Top of the market.
You do start to wonder. I mean, Tom, have you found an entry point yet?
Yeah, I got an entry point. Well, an iPhone broke 2 days ago, and I think another iPhone's going to break in 3 days.
I'm sorry, your Apple policies. I remember when you told me that the Apple Pods, the AirPods, were littered on your floor like Lego pieces.
Yeah, well, and the biggest problem is they're a chew toy for vet bills, so I'm like 0 for 8 on AirPods.
That's the Keene household for you, that AirPods are chew toys. A very different reality than perhaps what a lot of people are looking at, Tom.
Lisa, just quickly here, a wonderful Bloomberg summary of the rentals in New York. There seems to be a pop. There seems to be a buoyancy as people shop lower rents.
Yeah, so basically leasing activity has gone up, 94% or something, but this comes on a lot of concessions, and the prices of rents have come way down. So correcting, but there still is interest to live in Manhattan.
We will see. It shows us a little bit of the spirit of the New York landscape, beleaguered like so much of the rest of the world. The death count really quite extraordinary, 4,400 plus as well. Coming up on Washington, as Sam Stovall says he reads every day, Greg Valliere of AGF, a note on fire this morning.
With the First Word News, I'm Ritika Gupta. Now it's up to the Senate. The House put President Trump in the history books, impeaching him on a single charge of insurrection. It's the first time any president has been impeached twice. The resolution was supported by all Democrats and 10 Republicans. It now goes to the Republican-controlled Senate, which has refused a request to bring senators back and start the trial before next week's inauguration. President-elect Biden's advisors reportedly have told lawmakers a coronavirus relief plan will be in the $2 trillion range. That's according to CNN. Biden unveils that proposal today. It's said to include direct payments to American families and state and local funding. The struggling French car maker Renault is setting conservative goals to gradually return to pre-pandemic levels of profitability. The company is targeting an operating margin of more than 3% by 2023. It's clear Renault is trying to downplay expectations.
Times have changed. I think we prefer to work on the core needs of Renault, which are, cutting costs and looking for better margin and better segmentation, but not overpromise. We want to underpromise and overdeliver. I think it's better. Any good news on the market will be on top of that. It does not embed any new partnership, which we're working on especially with Nissan and Mitsubishi.
Renault has to deal with excess capacity, but it also has to pacify its largest shareholder, the French government. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I rise today to support impeachment. I do so with a heavy heart and a lasting and searing memory of being in this gallery, the People's House, right up there, fearing for my life. And why? Because the President of the United States incited others to be violent, a mob of insurgencies in this House. It's unacceptable.
This heinous act of domestic terrorism demands that Congress act to remove this president. Donald Trump has been and remains a threat to our national security and our democracy, and wholly unfit to serve as president.
The Democrat majority has determined he's already guilty, and there's no need of a trial, and they therefore move forward quickly with this phony impeachment charge. Today, I join my Republican colleagues in standing against this further effort to divide our nation.
With truth comes love, and we could use that right now. My vote to impeach our sitting president is not a fear-based decision. I am not choosing a side, I'm choosing truth. It's the only way to defeat fear.
This is a surveillance difference. McKinnon de Kuyper nailing those voices, because she ends with her two shots today with the 3rd and 4th congressional districts of Washington state. Think north of Portland, Oregon, with Ms. Butler, who you just saw, Herrera Butler, and Dan Newsom to the east of that, and Yakima and the rest of central agricultural Washington state. That's just a microcosm of the tension across this nation, all coalesced in the southwest corner of Washington state. Greg Valliere now with AGF. Greg, what will be the price to those 10 Republicans? Can you calculate the price to them in the primaries of 2022?
Yeah, I think some of them are going to lose in their primaries. I think Liz Cheney, though, has pretty decent support in the House, Tom. I wouldn't predict her downfall, but some of her colleagues might pay a price.
Your note this morning, Sam Stovall, thank you for mentioning that. Folks, we protect the copyright of our note. Lisa and I are not going to send it out to you. Go to AGF to see Valliere's note. Greg, you link pardons and the dynamics for this president towards the Senate votes beginning the 19th. Link those two.
Sure. If there was a vote today, the Senate would vote to acquit. I don't see the 17 votes necessary. However, we've got a week to go. So what do we get in the next week? Are there more disclosures about who was behind the riots, who was complicit? Are there more pardons? I think that events in the next week or so will be really crucial.
And it's happening in tandem with efforts to draft a new fiscal stimulus bill. Joe Biden planning to unveil that today at 7:15 p.m. Eastern time. The price tag, $2 trillion, $2.2 trillion, the expectation that Republicans will sign off on it. How realistic, Greg, is this bipartisanship that people are expecting?
I think it is for this bill, Lisa. Then I would get concerned about whether they can get a lot more. I mean, the plan right now is to go big. I would say $2 trillion or something close to it tonight is big. And then the plan is to wait and come up with another bill on infrastructure, green jobs, all that stuff later in the spring. That second bill could be difficult. On this one, I think that Biden will prevail, and I think it's a story the bond market has to worry about.
One story that people have been saying is that the impeachment, the turmoil in Washington, D.C. has unified Congress, has unified Republicans and Democrats to some degree to get some sort of bipartisanship. Do you think that's really an accurate representation?
Not necessarily. I think both parties are still in great disagreement. It's a weird, surreal climate right now in Washington. I went for a long run yesterday, and it's an armed camp in downtown Washington, and it's going to stay that way for a while.
Yeah, Greg, I went for a long run yesterday, too.
To get a new iPhone.
Yeah, no, actually, it was a marginal cocktail. Greg, when we look at this drama and we move forward, there is a changing from McConnell to Schumer. Color that change. What's the backstory there?
Well, they're both very partisan. They both know how to deal. I think, obviously, they have different priorities. And I think a major one is that Schumer really feels strongly about infrastructure. I mean, he's had to drive on the BQE and the LIE, and he knows you need more money spent on infrastructure. I think that'll be a priority. A lot of other things Schumer will place a big priority on, like a big increase in minimum wage. I think that comes fairly soon. So they're different, but I think they'll at least superficially get along. The big relationship, Tom, is the relationship between McConnell and Biden.
Okay, I'll go with that. But if your $2.2 trillion, as you published today, is a top end on the Biden stimulus tonight, do you have a figure on following infrastructure? Do we get out to the kind of support that the liberal economist Claudia Sahm mentions?
Oh, that comes in this second bill in the spring. They could talk about $500 billion or more on infrastructure. You know, you've got Republicans who have now found religion on the deficit. You can be sure of that. But you've got the bond market that send yields quite a bit higher. I think we just can't spend an unlimited amount of money or the markets may rebel.
This is kind of a sensitive question, Greg, but based on your conversations with your clients, typically big business has skewed Republican, has hewed more to the policies of Republicans. Who's the party of the C-suite right now?
That's a really intriguing question. Yeah. I think now you've got a lot of businesses that were aghast at what happened last week. They were aghast at Republicans refusing to accept the results of the election. So I think for now, at least, a lot of businesses are going to view Republicans as being in the doghouse.
All right, so Republicans in the doghouse, and we've seen that in terms of campaign contributions. What does that mean in terms of policy and where they will work with Republicans and where they will work with Democrats?
I think eventually we do get deals. I think that it will come, but we're still in the kumbaya phase where everybody is going to talk during the inauguration about, you know, working together. It never, ever winds up that way, and I think there will be huge differences over spending. And then the issue we haven't talked about is taxes. I think by mid-spring, the Ways and Means Committee is going to be putting together a tax bill, and it's going to be a bill the markets don't like.
Greg, thank you so much. I greatly appreciate. You know, what's great about this, folks, is Lisa and I are still in the kumbaya phase.
Oh, yeah? For each other or for 2021?
Well, we'll see. Greg Vallier with us with AGF
the answer is
this
yes.
morning. A really smart note. Lisa, I'm trying to correlate all this stimulus over to the stock market. Like, have we already seen the move? Or does it spur it forward? That seems to be the money question this morning.
Yeah, and I think ultimately, not only does it depend on the headline amount, but also where exactly it goes. And we really haven't talked enough about the composition. The expectation that the $2 trillion would include financing to the state and local governments, also a $2,000 payment to individuals. Again, that has bled directly into the economy, particularly consumer discretionaries, because you can go then, or perhaps somebody who actually receives one of these checks can go and buy lots of stuff.
John from Capri emails in and he says, you haven't quoted the real yield in ages. Let's look at it under 1%. Before we had this Democrat reality, we had a real yield negative 1.10, let's call it, and that was good. We have a lesser negative statistic now, about a negative 0.97. The dynamics here are higher nominal yield, higher yield that we see in the 10-year, with rising inflation expectations, and that gives you the debris, which is the real yield. Look for it tomorrow on Bloomberg Television.
And the theory behind this is how much will this increased borrowing actually juice growth going forward, Tom? And that is the tension in that real yield.
Well, we're seeing that with some people with optimism right now, but with some real mystery out. Andrew Balls of PIMCO was brilliant on that earlier this morning. Futures up 5, Dow futures up 90. Coming up, Francis Donald of Manulife. We recalibrate, I say, the American economy. She only comes after Maple Leafs Canadiens opening day of hockey. This is Bloomberg.
我开始做直播是在今年年初的时候，那主要是去年的话，我们参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，能做到长期持有；长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。明天希望高开赚钱，
祝大家赚大钱。
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I've said to other women as they've taken on their CEOs, I said, get ready, because everything you do is magnified. Everything you do is personalized. I can't tell you that that's fair, but it's what happens.
Substantial further progress means what it says. We'll be looking for an inflation to be substantially closer to our 2% longer run goal before we start making adjustments to our purchases.
That's a long time to be very accommodative, but that's basically the horizon.
They can buy more bonds and they can buy longer maturity bonds, and that would put more downward pressure on long-term interest rates.
Bloomberg Surveillance, good morning on radio, on television. Tom Keene in New York with Lisa Abramowitz. It is high-frequency data of unique value to economists, including our economics and policy correspondent, with a measure of the angst of this nation in our labor economy. Michael McKee.
Good morning, Tom. Unfortunately, we're getting the numbers a little delayed, but here they come, and they are not good. Jobless claims soar.
Is that the word is soar?
Soar. Now that everybody's paying attention.
This is not usual for McKee. Soar is unusual to hear from Michael McKee.
And accurate.
And for more than one reason, which I'll explain, but we haven't even given the number yet. 965,000. That is up for the week by over 200,000. That's an amazing increase, because we were expecting to see a little bit of a decline, because at this point seasonals should kick in and expect people to be laid off who were never hired this year because of COVID. An increase of 181,000 from the previous week's revised level, revised down by 3,000 to 784,000. So an extraordinarily big jump in jobless claims, and I got to tell you, that's going to make Joe Biden's sales job tonight a little bit easier. Now, we want to take a look at the overall numbers. The total number of people claiming benefits falls by 745,000, basically, but that is 2-week-old data to 18.4 million. That's from December 26th. Right. So we can expect that number to go up again. And then everybody's keeping an eye on pandemic unemployment, 284,000. That's a change of 123,000 more. These were the people who are independent contractors, gig workers, that sort of thing, who were able to get unemployment, but maybe not last week because of the interruption, because of the government, the delay in getting the bill passed, and now they're filing again, and they're filing a lot.
On radio and television, we're thrilled you're with us with this important information. Francis Donald to join in a moment with Manulife. Michael McKee, I did a bunch of fancy log gyrations with moving averages, and it's real simple. Statistically, we are at a tipping point. What is the significance for the president-elect if we break through a given fancy moving average study to a higher rate, indeed over 1 million per week?
Well, at this point, you've got to say that it is really in the optics of it. We know that the number of people who are claiming unemployment benefits is very elevated. A certain amount of it is fraud. A certain amount of it is seasonal adjustment and the difficulty we're having with this many holidays in a row. But the idea that we're close to 1 million is something that the president-elect can sell tonight. He can go out and say, look, we really need to do something for this economy. If we had gone down by 200,000, then it would be harder to make the case. But this puts pressure on Republicans as well as Democrats to do more. So if he's proposing the $2,000 checks, he's likely to get some support.
Yeah, meanwhile, just to put this into perspective, this is the highest weekly jobless claims that we've seen since August. So just to give you a sense of perspective, and the biggest, I believe, weekly jump in the number of claims going back to March, to the depths of when this really was initially surging up in the United States. Interesting, though, that traditionally good news is bad news is good news based on the expectations for the fiscal response. Right now, you're seeing yields tick down, which is actually bad news is bad news. The idea that perhaps this will dampen the recovery. Just, Mike, before we let you go, can you give us any color on the dispersion rather, between the upper income and the lower income tiers of the labor market in terms of who is suffering the hardest in this renewed wave of layoffs?
Yeah, this data obviously doesn't come up in the jobless claims numbers, but others have been calculating this, particularly the group at Harvard that's put together that kind of information and also more contemporaneous spending information. And we see that the upper incomes have been much less affected because they can largely work from home. And it's the people who have to go into work and the people who work in the service industries who were laid off. We saw big layoffs in service industries, particularly restaurants and drinking establishments, as they put it, in the December jobs numbers. And it looks like we may see something like that in January as well. This is the week that includes the jobs survey. So you're going to start seeing people mark down probably their estimates for January hiring.
Mike McKee, thank you so much, as always, for laying that out. We should just note, not only was the headline of the initial jobless claims much, much higher than the expected 789,000, but also continuing claims much higher and actually increasing from the prior week to 5.3 million individuals currently on the unemployment assistant rolls. So just to give you a sense of the ongoing pain, all the statistics pointing to a deepening of the crisis, which raises a question of how quickly we can emerge from this. So currently, we've got markets that are expecting it will be a pretty rapid recovery once a vaccine can be distributed and jabbed into our arms. Francis Donald, Manulife Investment Management Global Chief Economist and Global Head of Macro Strategy, joining us now. Francis, your first take on this really disappointing jobs report.
Yeah, for the last couple of months, when we've had bad data, we've struggled to make the point that it mattered for markets because bad data just meant more fiscal stimulus, and who cares, because on the second half of 2021, the economy is going to reaccelerate. But this number, to me, speaks to a tipping point in that narrative. We're not seeing rates surge following this terrible, terrible number, implying we're going to get a greater fiscal spend. What we're looking at here is a deepening of the crisis, a second economic wave that's coming through. And let's remember, there's a lot to say about fiscal, but what is Powell thinking as he looks at this number? He is speaking later today. What is he seeing? Global economies heading back into lockdown in Europe, in Asia. I'm up here in Canada. I have a curfew for the first time since I was 14 years old. He's looking at some members of the Fed talk about tapering, and he has 10 million Americans who are unemployed relative to February and a surge in jobless claims. It's not bad news is good news anymore. It's bad news reflecting really painful couple months ahead for the economy.
And could you elaborate a little bit on this tipping point, Francis, as you called it? Is it a tipping point for markets where bad news is bad news, or is it a tipping point for the economy where each of these weekly initial jobless claims suddenly has import beyond what it did, say, a month ago?
Well, first and foremost, for the economy, in my view, the first half of 2021 is going to look very rough. It's not going to be a formal recession just because the year-over-year comps don't get us there. But in December, the U.S. lost 140,000 jobs. That's recessionary territory. We are going to see a lot of weakness in the economy in the first few months. Those city economic surprise indexes are going to fall. And I struggle to see how the Federal Reserve allows rates to climb, even if it's gradual in this type of environment. This is not the time to be risking gradually raising rates. They have to keep things relatively supplanted. And if they don't, I really do worry about some form of taper tantrum, even if it's mini.
What is the most efficient use of stimulus? What are the lessons you've learned, Francis Donald, from support in Canada or support in Europe?
So first and foremost, you do have to plug the hole. Now, the best types of support are those that make sure people don't actually leave their jobs. So we're talking about wage supplements, for example. This was really, really successful in Germany. You also, of course, have to think longer term. We've been thinking a lot more longer term about infrastructure spending and how do we raise inflation and how do we get potential GDP higher. But I suspect we need to head back into an area where we're talking about providing immediate and urgent support. Google food lines. You're going to see people around the block over and over. This is still a very urgent situation.
Just because of time, I don't mean to interrupt, but this is really, really, really important. With the politics and the new calculus in Washington, is there a change in Lockean individualism in America where we're going to become more like Canada, you're Canada, we're going to become more like Europe and provide the income substitution and replacement that Jonathan Farrow speaks of?
Well, we're heading towards redistributive policies. You are likely going to see more demand for that. And I heard Lisa earlier say something really critical. Watch stimulus not for the headline number, but what it's being spent on. What it's being spent on is what will drive your growth and inflation over the longer term. And redistributive policies have a lot of merits to them, but they're not necessarily as inflationary as other types of spending. So let's just be cautious when we're analyzing fiscal, not just the headline, but what's under the surface as well.
Francis Donald of Manulife Asset Management, thank you so much for being with us on this day. A dramatic jobless figure coming out much worse than expected. The highest number of initial jobless claims, almost 1 million individuals for the first time going back to August. And Tom, the interesting thing is really critical in what Francis was talking about is it's unlikely the Federal Reserve will allow yields to rise anytime soon. And you're seeing this play out in markets that you've got both the yields coming down just a touch, but equities turning up just a little bit more.
I just put out on Twitter, Lisa, the claims chart. It's a fancy math chart. I'm not going to go into the glide path of it, but it completely destroys the idea that the Fed can be proactive in moving towards normalization. It's just not going to happen. I mean, there's just... It evaporated at 8:30 this morning.
Yeah, the question, though, is how do you influence the areas of the economy that need it the most? Is it the Federal Reserve? Is Fed policy really going to be what gets people off the food stamps and off of the food bank lines? I don't think so, right? So it has to come from Washington.
Well, we're going to hear that tonight. We'll have full coverage. David Weston on Watch with Kevin Cirilli here as Mr. Biden will speak. And, you know, I assume the president-elect got a heads up on these numbers, but you really wonder how it amends, you know, a single word, a single sentence within this speech.
I'm sorry, Tom. You didn't need to have a heads up to see the high-frequency data showing that the economy had declined. If you look at the Beige Book yesterday, it showed a deceleration in the economy.
I mean, you know, I don't read the Beige Book. I read in honor of the late Richard Yamarone.
You watch Home Alone.
Orange Book. But yeah, I watched my 5th version of Home Alone to look at the Trump rink in Central Park South. But Lisa, seriously here, you know, it's true, it's out there, and we know it, but there's nothing like, as Mike McKee said, of seeing that surge in claims. The actual statistic always has an impact.
And it's really people struggling to understand how quickly the labor market can recover, because once people can go back to the bars and go back to the restaurants, people will get reemployed, but the scarring implications, not only after people have been out of work for so long, but in an economy that has been fundamentally transformed in a much bigger tech way, really remain to be seen.
It is never boring as it was for claims this week, and of course we'll move through the economic week. As I say, a president-elect to address the nation tonight with a fiscal plan, I believe in the 7 o'clock hour. Look for that on Bloomberg. Coming up on oil, Jeffrey Curry, Goldman Sachs. This is Bloomberg on radio, on television.
With the First Word News, I'm Rishka Gupta. President Trump has become the first president ever to be impeached twice. The resolution was approved by all Democrats in the House and 10 Republicans. The president was accused of one count of incitement of insurrection for last week's riots at the Capitol. The next move is up to the Republican-controlled Senate. It's already rejected requests to bring senators back early. And Senate Majority Leader Mitch McConnell says he hasn't made a final decision whether to vote to impeach President Trump. McConnell sent a note to colleagues after reports that he had agreed to vote in favor of impeachment. He wrote that he intends to listen to the legal arguments before deciding. National Guard troops have taken up positions in the U.S. Capitol. More than 20,000 Guard personnel have been summoned. That's turned the Capitol and its park-like campus into an armed camp. Authorities say there's a major security threat around next week's inauguration, and they're trying to prevent a repeat of the riot at the Capitol. And the number of apartment leases signed in Manhattan almost doubled last month from a year ago. That's a sign that falling rents and landlord incentives are attracting tenants. According to appraiser Miller Samuel and brokerage Douglas Elliman, the value of those perks led the median rent to fall 17% to $2,800 a month. China's President Xi Jinping is calling on Starbucks to help improve relations with the U.S. In a letter to the chain's chairman emeritus, Howard Schultz, Xi said he hoped Starbucks would make active efforts to promote trade cooperation and bilateral relations. Schultz has previously said that China is a competitor of the U.S. rather than an enemy. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
With no sort of long-term supply projects coming on, unlike in 09, with maximum fiscal and monetary stimulus, the combined backdrop and the tailwinds will make this one of the best commodity cycles ever. And so you should see sort of 100 to 300% returns.
That was Dwight Anderson, Osprey Management founder, talking about the expectations of fiscal and monetary support boosting markets. We will continue that conversation on the open. Lisa Shallett, Morgan Stanley Wealth Management Chief Investment Officer, Tom, helping us carry that conversation forward as people look to the Joe Biden administration's plan, 7:15 p.m. this evening.
Well, we will see. We're looking forward to that as well. Right now, we've been anticipating this Jeffrey Curry of Goldman Sachs on the surge in oil. Jeff, many people are modeling out this is the top end of the range. Can you model a breakout of oil through 60?
Well, you have all of the telltale signs of a structural bull market at play here. You know, not only do you have oil, charging towards $60 a barrel, you have metals prices back to super cycle era levels, you have grains exploding, you have global liquidity increasing tremendously. At the exact same time, you look at the dollar, it's broken multi-year trend lines going back to 2011. So, when we think about the potential for a macro repricing across the commodity complex, this is the highest it's been in well over a decade. So we think there's a lot of upside risk, not only to oil, but the entire commodity complex.
I want to talk about Jurgen's wonderful new book, The New Map. For a pro like you, Jeff Curry, it's all old news. You probably helped Jurgen write it. But for the rest of us, it's overwhelming, the dynamics of U.S. production of oil. Are we at risk in the new map that Joe Biden is writing?
No. When we think about the current environment, and particularly given the ESG overlay, there's only really two sources of oil that can be brought on quickly to meet the potential deficits that we expect over the course of the next 12 to 24 months, and that's the Middle East and the United States. So it's going to be a very important part of that supply mixture. Now, when we think about the potential for Iran coming back with the Biden administration, one, Iran has probably fallen down the policy agenda somewhat, but more importantly, we expect there to be room for that supply as well when we look out into 2022.
Where do the Saudis and where do the Russians, speaking of the wonderful Jurgen book, where's their optimal oil price? I mean, I know Mr. Putin is going to say higher, 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 but where's their best price?
Well, I just want to remind everyone that remember in the 2000s during that structural bull market, they go the best price is $22 to $28 a barrel. Yep. Boom, you're at 35. Oh, best price is 35. I don't think they know, and I don't think we know. I just want to remind people that structural repricing that occurred in 05-06, everything repriced, and we saw structural repricing in 2015 to the downside. We're in the cusp of one of those happening. We may be in it. It feels like it in terms of looking at what's going on in all the other markets. It starts to become very difficult to pinpoint where that cost structure is.
Let's go Chicago with Jeffrey Curry, teaching for years at the University of Chicago, legendary in their microeconomics, which is the oxygen of Chicago. Jeff, you and I know there's a general equilibrium theory, a Marshallian cross of oil supply and demand. There's a misunderstanding by the public of how sensitive, how tight those elasticities, those responsivenesses are. Are we in a new equilibrium, or is it the same old, same old?
It's the same old, but the underlying cost that's associated with that same old is the one that's really uncertain. Let me give you an example of this. It's 2012. I was talking to one of our private equity clients. They valued a Canadian asset at $120 a barrel. It had an internal rate of return at 20%. Then 14 and 15 happened. What? Oil collapsed from 120 down to 45. The dollar ripped from 1.4 on the euro to 1.05. Iron ore crushed, copper crushed, Canadian dollar smashed. We're sitting at $45 a barrel. You went back to that same asset and revalued it. What was the IRR? 21, 22%. Everything repriced during that environment. And that's why it's really difficult when we say, all right, is there something different about this equilibrium? Yeah, it's really what are the prices attached to it.
For those of you taking notes on radio and at home on TV, I must say what you just heard from Dr. Curry there was brilliant. But do we have that same formula, that same reaction function now, or have we cut prices so much to a new efficiency? Jürgen alludes to this in the new map, that the technological leap isn't there anymore to cut costs if we see price pressure.
Well, I gave you the example to the downside. Now this one is moving to the upside. Like in 05. I don't have you a good private equity example for 05 when it repriced to the upside because they weren't active in this space back then. But I think in terms of what's going on right now is costs are rising. I like to point out we have Wall Street sanctioned cost inflation going on with companies, particularly ones that don't follow stringent ESG type strategies. So we're in an environment in which costs are inflating. Let me just give you an idea of why a weaker dollar creates upward cost structure. Let's take like copper. 45% of copper's production costs are local in Chile. And when we have the dollar weaken and the Chilean peso begin to strengthen, what happens to the cost of producing copper? It goes up almost immediately the minute the dollar begins to weaken. Even places like Colombia or Canada where we produce oil, that cost structure starts to creep up very quickly with the weakening dollar. And then you get what we call the reflationary feedback loop. So what you have, a weak dollar puts upward pressure on commodities. Higher commodity prices lead to greater global liquidity. Let me emphasize, Saudi's excess reserves went up in the month of November by 10 billion. So what happens? That excess liquidity gets lent out, creates more demand for commodities, and the whole cycle goes up, and you get that reflation.
But there's a circuitous function here that leads to this optimism of price and just the microcosm of it helping push prices up. Does it lead to a commodity bull market, or is it a lift off the great commodity recession?
I would argue this is a structural bull market, and you played Dwight Anderson, talking about the type of tailwinds you have going on. You have structural underinvestment in supply, similar to what we had 20 years ago, but turbocharged because of COVID prices going negative and the fact that you have the ESG overlay on it. Second, you have policy-driven demand, redistributional policies, green CapEx, all of that fueling a structural upward shift in demand. And then the third one is you have that tailwind of a weak dollar that really creates inflationary feedback loop.
Is American big oil ready for your scenario?
Part of the reason why we're bullish from a supply perspective is they're not there. Looking at, the Permian, the activities of the big super majors around the world have come off tremendously. There's an ESG component there, but there's also just, hey, returns weren't that great. So the bottom line, yes, there is definitely, the makings here for, a very strong bull market. And the interest in some of these companies, they may be, but they're moving forward in a very different direction.
So this is really important. I don't want you to take over David Costin's shingle here, but bringing over the commodity perspective of Curry over to the equity market application of Costin, can you advise David Costin to be overweight energy even after the lift off the bottom?
We want to be overweight commodities. And the one thing that separates commodities from, financial assets is financial assets, they anticipate the future. Commodities are spot assets, and they pick up as a hedge against potential inflation, the unanticipated physical moves in the real economy. So as we think you're going to physically take off with the vaccination, improvement in economic activity in the second quarter, you're going to want to be long spot assets, real assets. So we much prefer, the commodity as opposed to the commodity-related equity.
Well, I just need to revisit this, Dr. Curry. One final question. If you look at the break in commodities off of 08, and this is the glide path that we've seen through a decade, to be clear here, you're calling for a reaffirmation of a commodity bull market.
Without question. Again, I want to emphasize, this ship has sailed. If you look at all the classic, telltale signs of a structural bull market, you have the weak dollar, grain prices. We didn't even talk about grain prices. I had a client call corn Bitcoin recently. And then you have what's going on in the metals markets. Overlay that, and the kicker is the global liquidity is beginning to rise because that's the oil to the machine that really starts that reflationary feedback loop.
Jeff Curry, hugely informative. Thank you so much with Goldman Sachs this morning. Really can't say the value that you heard there. And of course, it folds into all the other commodity sources we have, including our team at Bloomberg Intelligence. I don't have time to throw up all the charts, but it's really interesting. The rebound that Curry has been on in a blended commodity index really up against ancient resistance, and to break through that to some form of new bull market would be a great Goldman Sachs call. Futures up 6, Dow futures up 96. I want to reframe the markets, and I can say, yes, yields have come in, but come in fractionally off the shock of that claims report, a 110, even a 111 level in a basis point and a half. Excuse me, I don't want to oversell that, but nevertheless, that's what we see. Gold can't get a bid this morning, negative 14, 18.41 an ounce. And in the currency space, I'm going to call it boredom. I do want to point out, and this goes to the pandemic and maybe the British response versus Europe, sterling nicely at 136.30 as well. Not through to new strength, but nevertheless really holding on nicely. The same with renminbi, 6.47, going the other way directionally on a chart. Yuan resiliently strong over the last number of days. Thanks to Michael Purvis for that view of the Pacific Rim earlier this morning. And now to the politics. Kevin Cirilli getting ready for Sound on Bloomberg Radio. That'll be important. And I'm sorry, a delicate interview today for David Weston with Donald Trump's good friend, Wilbur Ross of Florida, the Secretary of Commerce, the balance of a changing power of Washington. Please stay with us on Bloomberg Radio and Bloomberg Television today. Good morning.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
For our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow. The countdown to the open starts right now. We begin with the big issue, an unprecedented second impeachment for President Donald Trump.
Bipartisan way, the House demonstrated that no one is above the law, not even the President of the United States. That Donald Trump is a clear and present danger to our country, and that once again, we honored our oath of office to protect and defend the Constitution of the United States.
The House of Representatives clearing the measure with 10 Republican votes, making it the most bipartisan impeachment in U.S. history. Washington State Representative Jamie Herrera Butler crossing party lines and voting in favor of impeaching the president.
Our sitting president is not a fear-based decision. I am not choosing a side, I'm choosing truth. It's the only way to defeat fear.
House GOP leader and staunch ally of the president, Kevin McCarthy, calling for the House to censure Trump, but opposing the impeachment vote.
A vote to impeach will further fan the flames of partisan division. That doesn't mean the president is free from fault. The president bears responsibility for Wednesday's attack on Congress by mob rioters.
The president responding with a message to supporters speaking out against violence, but still refusing to take responsibility for the events on Capitol Hill.
Violence and vandalism have absolutely no place in our country and no place in our movement. Mob violence goes against everything I believe in and everything our movement stands for. No true supporter of mine could ever endorse political violence.
The president's fate now lying with Mitch McConnell, with the impeachment heading to the Senate. The majority leader withholding judgment for now, saying, quote, I have not made a final decision on how I will vote, and I intend to listen to the legal arguments when they are presented to the Senate. For more, let's bring in Kevin Cirilli, a Bloomberg chief Washington correspondent. Kevin, can you give us some color on the angst right now within the Republican Party about whether or not to proceed and convict on this impeachment?
Well, there's confusion amongst the staffs and really a city that is still in process in terms of all of the staffers that support various senators. And I think there's a political lane here that we should note in terms of the thinking of Senate Majority Leader Mitch McConnell, who now has all but said that the trial will happen after President-elect Joe Biden is sworn in. Why would the Republican Party oversee that legal trial, and why rush the process? Why not allow there to be more time, more investigative work to come out, more look into the chronology and the narrative in terms of the lead up and the communication between those who helped organize and arrange last week's insurrection? And so for Senate Minority Leader Chuck Schumer, who then will become one of the leaders in the Senate, they will then oversee. But off the top of my head, look for senators in the Republican Party, like Lisa Murkowski, Susan Collins, Mitt Romney, just three to come to mind. You look at all of the others who have been very critical of this administration in the past and who have spoken out against last week's attack on the Capitol. And already right there are a handful of Republican senators who likely will vote to convict. The magic number, of course, would have to be in double digits. But with the show of support yesterday from Liz Cheney and Adam Kinzinger in the House of Representatives, those are two incredibly influential Republicans who have deep ties to Republican establishment, and that was a clear signal that they anticipate that Republicans in the Senate will vote to convict. And Leader McConnell's statement yesterday saying that he is undecided just goes to show you how very much fluid this situation is.
Kevin Cirilli, thank you so much. You'll be tracking it for us, I am sure. Stay safe in Washington, D.C. Morgan Stanley's Lisa Shallett saying the shifting political landscape could be a double-edged sword for markets, writing, quote, chances of a reflationary boom that unmoors not only nominal and real 10-year Treasury yields, but also threatens lofty stock valuations have materially increased with the Democrats' sweep of 2 U.S. Senate seats in the Georgia runoff. Lisa Shallett joining us now. Lisa, when we talk about a tipping point for markets, how do you see it playing out from here in valuations, given the fact that people have just piled into the rotation trade?
Yeah, look, I think that everyone has jumped to the conclusion, and it may be well-founded, that with even the slightest razor-thin majority in now both houses, that the Democrats will be able to pass further stimulus spending. Whether we're talking about truing up, checks to those most in need from $600 per family to $2,000, or we're talking about, additional spending for vaccine rollout or even infrastructure. Our guess is that there could be another $1 to $1.5 trillion in stimulus passed over the next 18 months. And that's, significant. We've gotten used to these big numbers. But, if you look at it cumulatively since the CARES Act last year and the numbers, that we know about the $900 billion from December and we're now getting towards $5 trillion in fiscal stimulus, which is the equivalent of 25% of annual U.S. GDP. It's just a staggering amount of liquidity for this market.
Will we ever worry about how to pay for it?
I do think that day is going to come, and what's probably going to force the conversation is not only the extent to which the U.S. dollar weakens around the accumulation of debts and deficits, but the extent to which interest rates move up and the market pushes interest rates up as potentially, bond holders and treasury holders, especially those off international holders, demand a bigger risk premium. And that's when we're going to, have to have this much tougher debate when the cost of servicing the debt begins to pinch. And our guess is that as rates move into the 2 to 2.5% on the 10-year, 4% on the 30-year, that's when the proverbial situation will need to be dealt with.
In the meantime, in the meantime, the Federal Reserve is making it pretty clear that they've got the markets back and that they plan to continue to buy and to keep rates low until inflation runs above 2%, I believe, for at least a year. That's according to Fed Vice Chair Rich Clarida yesterday in a speech. At what point do you think their hand is forced? In other words, do you think that what we're hearing out of Washington, D.C. is truly reflationary, that we'll see inflation, or do you think that those hopes have gone a little too far?
No, I think we really are going to see inflation. And one of the points that we have continued to make is that the difference this time, quote unquote, is that back in the great financial crisis, when we saw quantitative easing, we didn't see the level of money growth and money velocity because the U.S. banking system was deleveraging and the U.S. household sector was deleveraging under the pressures of the collapsing housing values and mortgages. That's not the case this time. The U.S. banking system is in extraordinary shape and is prepared to lend. The household balance sheet is in fantastic shape, with savings rates, near multi-year highs. And so we're looking at money velocity that is very strong, and M2 growth that has averaged 27% on an annualized basis. That type of liquidity not only is driving inflation that we've seen in asset prices, but it's starting to really show up in commodities. We always talk about things like oil, we talk about things like copper, but let's look at things like corn. Food inflation has moved up, and that's where these things start moving into, quote unquote, the core. So we think that the inflation threat is real. We don't believe that monetary economics are completely broken. What was broken in the great financial crisis was money velocity. And balance sheets have been healed, and we're seeing a lot of money sloshing around.
When we talk about inflation, Lisa, moving away from just interest rates and what that means for the Federal Reserve, which stocks, which companies will actually perform best in this kind of environment, and which will suffer the most?
Yeah, so look, we've always said that stocks are a reasonable hedge, at least vis-a-vis bonds and fixed income vehicles, against inflation. But when you look in the stock market, what you're looking for at this point are those companies that have pricing power. And there's, typically two sources of pricing power. One is unassailable, brand leadership and market leadership that allows you to raise prices. And the other is that, you're providing a scarce commodity that tends to be linked to your input prices. So things like consumer goods and things of that nature.
Lisa Shallett, thank you so much for that. Bloomberg's Kaylee Lyons joining us now with a look at the stocks moving ahead of the opening bell. Kaylee.
Well, Lisa, I want to begin with Delta Airlines. It's higher by nearly 3% in pre-market trading after reporting earnings this morning. Did report a greater loss than expected, but burned less cash, and the forward guidance pretty upbeat. The company standing by its production. It would break even by spring, even sees profitability in the third quarter as more vaccinations encourage travel. Speaking of travel, how about space travel, Lisa? Virgin Galactic higher by more than 15% in pre-market trading. You can thank Kathy Wood over at ARK Investments for that. She's starting a space travel ETF, ARK X. That should benefit the likes of Virgin Galactic. Elsewhere, BlackRock reporting results this morning. Assets under management hitting a record $8.7 trillion. That was higher than expected. It's actually down, interestingly, in pre-market trading by about 2.5%, even despite that. And just a quick check on Johnson & Johnson, shares up about 2%. It, of course, is developing a one-shot COVID-19 vaccine, and a preliminary study showed positive results, about 90% effective. Flipping up the board here, let's take a look at some Chinese ADRs. Alibaba and Tencent breathing a sigh of relief this morning after rallying in the Asian session. This on news that the U.S. is reportedly dropping its plan to ban investing in these shares. They also reportedly were considering a ban on Baidu and reconsidered. That stock is higher as well. Imposing such a ban obviously would have been a major escalation, possibly stoke U.S.-China tensions. The U.S. ultimately deciding, it seems, it does not want to fan those flames, Lisa, and that removes a cloud of uncertainty over some of these Chinese names.
Kaylee Lyons, thank you so much. Coming up, the president-elect preparing to unveil a new relief package amid a divided Senate and deteriorating economy. That conversation coming up next with Citigroup's David Balin. From New York, this is Bloomberg.
explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The Biden plan that's to be unveiled.
The crystallization of the blue wave scenario.
That's really the key thing.
Markets are expecting much more stimulus.
More fiscal stimulus.
There's going to be greater fiscal stimulus than perhaps was thought.
Fiscal stimulus, comes on in a bigger way after Biden takes office.
That means more stimulus checks.
That's going to spur demand.
That's exactly what the economy really needs at the moment.
You now have a blue wave that controls two budget reconciliation processes.
Fiscal policy is going to be a support not for months or quarters, but years.
Expectations soon of becoming a reality. President-elect Joe Biden preparing to announce his COVID-19 relief bill, with reports suggesting a package of $2 trillion or more. Bloomberg International economics and policy correspondent Michael McKee joining us now. Mike.
Yeah, it's Lisa, like all those people expected what happened this morning. Joe Biden getting a big help from the Labor Department. Jobless claims soar by 181,000 to 965,000 last week. That's the highest since March. And as you can see, it's more than double the highest level during the great financial crisis. It is a big reason for what's expected to be the centerpiece of the Biden package, more checks. The president-elect expected tonight to propose $1,400 checks, add those together with the $600 that already went out, and you get that $2,000 check level. Also, while most Americans will take that away from the speech tonight, certainly. Tens of billions of dollars in aid for states and cities strapped by falling tax revenue and COVID fighting expenses. Billions for vaccine distribution as the country ramps up. And there will be a big package of aid for school systems in an effort to get as many schools open as possible, both to help the students out and get parents back in the labor force. Biden also likely to extend and maybe enhance the jobless benefits. Remember, those were extended until mid-March, but then they would expire again. The open question is, what else does he put in there? Will he include the $15 minimum wage that he endorsed? Will there be any action on student debt relief? Will there be any infrastructure programs in the measure? The size and scope of the measure will tell us something about how he wants to do this. If it's at the smaller end and concentrated on COVID relief, then he'll probably try to do a bipartisan passage in the House and Senate. Republicans will likely sign on to some of that. A large bill, especially with infrastructure or anything green, is probably going to take the reconciliation process, the ability to go through the budget in a way that avoids a Senate filibuster. But the goal is going to be put a floor under the economy that's seeing record case levels and record deaths this month, get cash to people who need it so they can spend it to help the overall economy. We get retail sales tomorrow. They're expected to be flat to down for the third month in a row. And this is holiday spending, so not good news. The economy not in a good place right now, Lisa.
Michael McKee, and certainly the jobless claims that came out this morning confirming that with the biggest increase since late March in the people who are filing for benefits after losing their jobs. Citigroup's David Balin expecting the recovery to fuel a favorable environment for markets, writing, quote, "We believe portfolios should be fully invested, balancing asset classes and shifting to exploit relative value and growth opportunities and favoring equities over safer fixed income." David joining us now with more. Let's start with the economy and sort of this conundrum that a lot of people have had, this idea that we're seeing a deteriorating picture when you look at just the initial jobless claims, when you look at retail sales, but the expectations of stimulus continues to support markets. At what point is this dichotomy unsustainable?
Well, in the event that this new bill wasn't passed, I think it would be unsustainable. But given the size of the bill that was just passed during the lame duck section of Congress and the bill that we just were talking about, this would be a sizable amount of money. It'll be directed very differently than it would have been had the Democrats not controlled both parts of Congress. So, for example, the implication that it'll support municipalities, it'll support transport, it'll support hospitals, and it then will add extra stimulus for individuals are all very, very bullish. We're dealing here with a very different type of recession than we were, in the great financial crisis. This is an exogenous shock. We have vaccines on the way. We're going to see an economy that reopens in the second quarter very substantially. And that'll be because of not only vaccines, but because of the fact that coronavirus is highly cyclical. So when we take all of that together, the stimulus and the fact that the vaccine is coming and that the cyclicality of the virus itself, we're going to have a moment in time coming up, not a few months from now, when the markets will genuinely reopen, when international air travel will become far freer and global trade the same. Remember, right now, 15% of the world's economy is largely shut down, and yet retail sales are where they are now was where they were in December of 2019. So there's a lot of reasons for optimism. I think you have to be very careful how you build portfolios, but there is a very strong case that for the next 2 years, we're going to have very strong equity markets and interest rates held artificially low.
How closely are you watching, David, not only the headline number of potential stimulus, but the details in the bill, who's getting the money, how it's being distributed in order to determine where to invest?
Well, it has, these things are always sloppy, right? When you have large bills, doing large things, the inefficiency of that is pretty significant. So we look at the total size, and of course, what we're looking at here, and you mentioned some of these things, is where some of the money is going to go. So when money goes to schools and municipalities and hospitals and transport systems, that all speaks to me of employment. And that's very important. There are 4 million people in America today who are not looking for work, either because they don't think they're going to get a job or because COVID is there. So if you take that 4 million plus the unemployment figures, American unemployment is between 10 and 10.5% for real. So this type of bill that focuses on those areas of the economy, those are big areas of employment. Keeping people employed at schools means that more people can go to work at home because their children are at school. And similarly, by having full employment within